revenue guidance that Ravindra Energy has given, FY26 is expected at 515 odd crore, FY27 revenue is expected at 800 crore, while on the EBITDA guidance, FY26 is 92 crore and FY27 is 127 crore. So overall, the MOU which has been signed is the reason why we are seeing Ravindra Energy stock is up almost 7% in trade. So with this, it's time to wrap this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open.
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani and with me as always is Puneet Zaveri. And before we start taking all your stock related questions, let's take a quick look as to how the markets are doing at this hour. As and when, as far as we talk about the benchmarks, the Nifty 50 is still holding up by about 182 odd points, almost trading at its day's high point, well above the 24,500 levels is what we're seeing, up by about 0.7 odd percent. Let's try to pull up the heat map and see as to whether the counters that we saw at 10:30 are also holding up or not. You have names like Trent is still holding up 3.5%, followed by something like Bajaj Finance, ICICI Bank, HDFC Bank, Axis Bank. So a lot of private banking names have come up and are trading almost 2% higher each. Adani names also doing fairly well. Adani Ports up 1.4%, followed by Apollo Hospitals. Eternal also seeing gains about 1.25 odd percent. Let's try to pull up. In fact, even the bank Nifty is doing fairly well, up 1.5 odd percent, trading in that 57,300 odd levels. Let's try to pull up the sectoral heat map to see as to what sectors are doing right now, whether all of them still trading in the green or not. And yes, except for the Nifty CPSE, largely all of these sectors trading in the green. Nifty Realty, of course, still topping that chart, up 2.4%, followed by private banks, largely led by the names we just talked about, right? HDFC Bank, ICICI Bank, as well as Axis. You have media, which is also seeing an uptick of 1.4%, followed by defense, as well as, you have PSU banks also doing fairly well. So that's with regards to where the sectors go. But the advanced decline ratio, that's an interesting one to watch out for because, yesterday's trade was still a tad confusing when it came to the broader markets. But today, I think we have clear winners. There's bias purely towards the bull side, and you have around 1,800 odd advances versus that of 700 odd declines. Of course, the ratio has narrowed down, Puneet, but overall, the broader end of spectrum is also holding up.
Most certainly, and we're still awaiting numbers from Nestle.
Yeah.
It's like we've gone through 2-3 shows now and still no numbers from Nestle yet. So we could be expecting some probably in this show. We are ready with Mahima already in the studio, but continues to be a good one because it's fallen off from the day's high, now trading just sub 1,300 odd levels. But an important earnings expectations are strong, as Mahima has been highlighting throughout the day. Volume growth is something to watch, but overall it's going to be an interesting one as and when it decides to come. But overall, the mid cap and the small cap also very interesting space where they are in. We've seen follow on buying both on the mid cap 150 as well as on the small cap 250 as well, which has been outperforming all benchmarks today. So it has been the second day in a row wherever the markets have been up. The small cap index continues to outperform the benchmarks at this point of time. Is the story that is unfolding in front of us. In terms of the BSE 500 though, individual names, you saw in the morning a couple of them continuing to do well. Lemon Tree was one, fallen off a little bit from the highs, but Kenpla Summer is now up 8.9% in trade. PNB Housing still up 8% on the back of earnings, and it's taking along with it all the other housing finance company as well in terms of strong expectations. Deepak Nitrite also up 5.4% on the back of possible product pricing upbeat for the specific products that it operates in. But let me welcome in our guest for today, Sachin Janardhan, EVP Derivatives, and Radharaman Agarwal, Managing Director and CEO of Swom Advisors. Mr. Raman, I hope I'm pronouncing the name of your advisory company correctly. It's Swom Advisors?
Swom Advisors, yes.
Okay, it's definitely a tongue twister there, but thanks so much for joining in. And let me go across, take the first query right away. And it's been something that we've been talking about for a while now. It's in terms of HDFC Bank. Now, our viewer holds roughly shares at 825 rupees per share, and MM Kapoor is asking what he should do with his 70 shares now. Mr. Raman, what would you recommend on HDFC Bank? Should Mr. Kapoor continue to hold?
I think he should hold on. I think results also out, and banks have given a reasonable result. So I think he should continue to hold, and I think overall the banking sector looks positive from here. So he should be holding on the positions.
Okay, all right. So that's the view coming in on HDFC Bank. The next one that we're talking about is SBI Life Insurance. This is coming in from one of our viewers who's not, by the way, mentioned his name, but basically he wants a really short-term view on this one. He's got 42 shares at the levels of 1908 and wants to know the next target for the next 15 odd days. I'll stick with you for this one. I think I'll take this up with Sachin first. Sachin, your view on SBI Life?
So SBI Life currently is in a downtrend basically. So a good bounce has come from the bottom and it has already given a 15% return. So today's candle basically is a bearish candle, and what we can see right now, the support levels are around 1859 and 1828. If these supports are not holding, then we can see a new low coming and it can break 1728 levels as well. So a stop loss of 1828 will be the must for if he wants to hold his stock.
But let's go across, take our next caller from Bengaluru, and Ram has a stock query for us. Ram, very good afternoon. Welcome to the show. What's your query?
Yeah, hi, good afternoon. I'm looking for a 2 to 4 years horizon, and I'm looking at between Bajaj Auto and Eicher Motors.
Okay.
So both the P's and the ROC and ROE are similar, but slight variance in the returns.
Right.
So I don't have any holding. So wanted a view on which is a better stock to buy, and is the timing good to enter at this stage, and what will be the entry levels?
Is this more from a long-term perspective, Ram?
2 years. 2 years. I'm looking at 2 years.
2 years, got it. Well, Radharaman, what would be your opinion between Eicher Motors as well as Bajaj Auto? We've seen, both of them launch the electric vehicles ventures as well. But Eicher has been outperforming Bajaj at this point of time. Would that be your consensus buy as well at this point of time?
So I think between Eicher and Bajaj, Eicher holds a better position, given the premium biking and the way we look at. Between the two, although Bajaj has been doing extremely well in terms of exports, and if you look at the data, they have done well. But between the two, if you want me to maybe pick one, Eicher will be one, given the premium positioning of the motorcycles, what they're looking at. And premiumization will be a theme in the two-wheeler space as well. So I think between the two, if you ask me to pick one, Eicher will be the one which we'll be looking at.
All right, so that's the view coming in on all of these auto names. The next one is on Varun Beverages. Bhaskar from Bengaluru says that he wants to buy this for the next 2 odd months. So from a short-term perspective, he wants to know your analysis, Sachin, on this one. Your view on Varun Beverages?
So from last 2 days, it is trading above the 200-day moving averages. Yesterday, it retested it, and yesterday's high is also broken. So basically, this is a confirmation of going long right now. But already the stock has moved from a bottom around 27 to 28%. So what I recommend will be to buy on dip right now. And the levels will be around 460 and 445. These are the support levels for the stock. So he can buy right now 50% and then wait for the rest to add at the support levels mentioned. We can see from here around 5 to 10% if the time frame is shorter. If 2 months time frame is there, then around 10 to 15% we can see.
Got that view, Sachin. The next question coming in on HDB Financial, and this is Shrishti writing to us from Bengaluru. She's holding 106 shares at 745, which is very close to its IPO price of 740, asking if she should continue to hold or shift to some other sector. Radharaman, the recent quarterly results were actually quite strong for HDB Financial. We saw that stock move upwards also. But would you recommend Shrishti to average down at this point of time, given the positivity?
My suggestion will be from an HDB Financial, she can look for maybe switching to gold finance companies. I think they are expected to post good numbers, and there's been a good correction in the gold, and the prices are expected to move up. So the ideal scenario should be maybe switching it to maybe a gold finance company to that extent.
The next one is coming in on CG Power. Our viewer, Jayakrishnan from Kerala, wants to know if this is the right level to buy from a swing trade perspective. Sachin, any view on this one?
So on a daily chart, it has actually broken out from inverse head and shoulder type of a pattern, which is a bullish pattern basically. So he can enter right now and the targets will be around 875 and 992. These are the pattern targets basically. So overall, the pattern took around 6 months to form. So we can expect the target first of 875 within 3 months, and the second will be 6 months.
Got that view, Sachin. But let's go across, take our next caller now from Jammu. And Vivek has a stock query for us. Vivek, good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon, sir. Actually, I want to know about the stock is TVS Holdings.
Okay.
I want to know about this this analysis of the stock from investment point of view, from holding it from long term, for 5 to 7 years. Whether it's a good stock for wealth creation, and what is the right price to enter it?
And is there any reason, Vivek, you want to enter TVS Holdings? Because definitely the holding company has multiple businesses, largely driven, of course, by TVS Motor. But is there any particular reason you want to buy a holding company right now?
No, because it is one of the most diversified conglomerate of the country. So there are various businesses involved. So from that perspective, I am trying to just enter the stock. So
fair enough.
In one company, we can get a diversification only through one company.
Right. Well, Vivek, most certainly you get the advantage of diversification. But Radharaman, on TVS Holdings, because we've seen Bombay Burma, which holds majority stake in Britannia, has also been in a sidewards momentum. What is your view on TVS Holdings? Is it something that Vivek should venture into?
So ideally speaking, maybe taking a position in the holding company is always a holding company discount, and the true value of the company does not emerge out in those companies. So if you look at from a true sense of investing, ideally we should avoid such setup. But at the same time, if you want to maybe take a conglomerate and then try to take it, then I think TVS Holding will be a good thing for a long run perspective. But you'll always have a trouble in terms of value add, and then the holding discount will always apply, and that can further get deepened at times. So it'll be difficult to that extent to make money in those companies. So ideally speaking, you should avoid a holding company. But if at all you would like to invest, then I think it's a good company to take up on.
Okay, all right. The next one is coming on Canfin Homes. Our viewer has bought it at the levels of 808, and 139 shares is what he or she is holding. Wants to know if averaging out at the current levels makes sense or continue to hold this counter. Tell me about the companies, what he's saying. So I'm guessing he wants a fundamental view on this one. So Radharaman, I'll stick with you for Canfin Homes. What's the view like?
I think we should be looking at good numbers going forward as well. So he should be sticking to the particular script and maybe let the positions be rolled over. So effectively, he should hold on.
Okay, all right. We've got our next caller, Dia, I think is calling us from Bengaluru. Dia, very good afternoon to you. What's your query about?
Yeah, good afternoon, ma'am.
Go ahead, Dia.
I'm having transfers and rectified shares of 800 quantity of 300 average.
Okay.
So what is which price point I need to sell this? Should I hold or just exit the price today? I think 335. So can you please help us with a short-term and long-term perspective on this?
So Dia, when you bought this, did you see the charts while buying it?
Yeah, ma'am.
Got it. Okay, then I'll take this up with Sachin. Sachin, she's sitting on small profits right now, but given her quantity, she's gaining around 23,000 odd rupees. Do you think she should continue to hold? There's further upside on Tarer, or can she book her profits?
So currently, I'm not able to fetch the company's name basically. So
Transformers and rectifiers. Transformers and rectifiers.
Transform.
Okay. Trill is the ticker for it. It's up 2.7% as we speak right now. If you can try to pull up the 3 months and 6 months chart as well for this one, till Sachin tries to fetch the chart.
Overall, yeah, I got it.
Okay, sure. Go ahead.
Actually, the NSE code for this is TARIN. So I was searching for TRIN.
Okay, got it.
It was not fetching. So currently, what we can see, the base formation has happened in the stock. But right now it is at the influence stock, basically at a 200-day moving average, which is currently placed at around 346 level. So this will be the nearest resistance for the stock, and the support will be around 306. So basically, after the base formation, what we can look in the stock, if it is sustaining above the 344 levels, then we can expect 396 and 448 levels. In this case, it needs to hold 279. So this will be the stop loss. If she is hold with this 279 stop loss, we can see the upside levels. But overall trend is down, so we need to be cautious. Without stop loss, should not hold.
Got your view, but Definitely did. So at the bottom of the screen, of course, Nestle numbers flashing in, and we'll get to that in just a bit as Mahima goes through. I'll just take a very quick question, or actually we'll just stay with this because the numbers currently suggest, Mahima, it flows that a beat in terms of the revenue, but what are you picking up?
Yeah, I think it's a beat in terms of where estimates were. The estimated number was around 6,100 and the uptick that was expected was around 12%, but I think it's come way beyond that, 6,186 crore versus of an estimate versus that of 6,748 crore coming in for Nestle. So it's a huge beat coming in. I'm sure the stock is also reacting to it. They've also declared a final dividend coming in. The net profit is also a beat, a 926 odd crore, slight beat of course, versus that of 1114 odd crore. So the expectation was of an uptick of 5% when it comes to net profit, but I think it's beyond that. Around 7 to 8% of an uptick is what we're seeing on the net profit number. Let's see if we can get the EBITDA numbers also soon flashing on the screen. But the stock is most certainly reacting to it. There you go. There's a sharp spike coming in for the Nestle counter, up 3% as we speak. And on the back of that, today throughout the day we've seen, in fact, in the past couple of days also we've seen Nifty FMCG reacting, positively. We saw Bajaj Consumer coming in with good numbers, and now Nestle also coming in with numbers completely beating the estimates, the analyst estimates, consensus estimates that we'd given, up 3.5% as we speak now. Let's try to, see if we can get the EBITDA number also. But, before I... Sachin, any view on the charts quickly, considering that we are seeing a spike on this one? EBITDA numbers, in fact, by the way, have also come in. Yet again, a beat on EBITDA numbers as well. 1772 crores versus that of 1498 crores when it comes to the EBITDA numbers. So I think the margins would also be in that range of 25 odd percent. We'll get you that in a bit, but Sachin, your quick view on the charts for Nestle?
Nestle, it is closing above the 1335 level, which is very near. Basically, today it has made a high of 1334. There were the earlier levels for 1334.80. So only a shortfall. Basically, if it is closing above the 1335 level, we can see 1422 and 1510 levels on the upside.
Well, it's in terms of employee benefit expenses, Mahima looks at the other key numbers, it's actually not increased too much on a YY basis, and the other expenses also, while inching up a little bit, and that was expected based on higher advertising cost, was something to watch out for, and has been more in control in that sense as well. But let me also welcome in Mayuresh Joshi at this point. We'll try and connect with Mayuresh Joshi also, who will join us very, very quickly. But Mahima, what are some of the other details that you're picking up?
I think the key commentary coming in, before I go on to that, I think margins, the big beat coming in. The expectation was to come in at that 24% mark and coming at 26% mark, which is even better as compared to what they did in Q4 FY25, which was around 25 odd percent. So that's definitely on a very surprising note coming in. I think, like Puneet was mentioning, it's the employee costs which have not moved much. We'll have to see as to how they've penciled in terms of the edible oil inflation, which probably will take effect in Q1 FY27, because edible oil prices, palm oil prices to be specific, have gone up by 25% in this quarter itself. So they, quarter 4 would have been running on the prices that they would have bought in the last quarter. But I think quarter 1 is where they're going to take the hit in. But the commentary coming in, all our business channels have recorded a strong double-digit growth. I think that is something that brings in positivity when it comes to the stock performance as well. Nestle India has reported the strongest quarterly growth in nearly a decade now, by the way. And you're seeing that stock coming up on the back of that and driven by double-digit volume growth. But we'll soon also get you an analyst view on Nestle as a whole. But Radha, by any chance, if you've had the chance to take a look at the numbers, any view on Nestle?
I think there's a good beat both in terms of revenue and bottom line. We have to look at the finer details by the time we get it, but there's a very strong set of numbers coming in and maybe define the whole piece. In fact, we've seen the results of Bajaj Consumer and then followed by Nestle. So I think once we deep dive and maybe understand on the call, but it's a very positive beat on both the sides. And especially on the top line side, I think they have done extremely well.
Okay, we've got Avinash joining us on the phone call now. Avinash, very good afternoon to you, and thank you so much for joining us at such a short notice. Your first read on the numbers, it seems to be a big beat coming in, and I think the surprise for me was on the front of margins. What's your take?
No, definitely. See, margins seem to be much better. In fact, the street was expecting a little improvement in the EBITDA margins, but I think this kind of beat is quite surprising, and I think, the markets would like to know how sustainable these margins are. In fact, what has been the volume growth trajectory, what has been the value trajectory. I think overall these numbers, I think, clearly indicate that maybe, the first quarter of this financial year, that is April to June, also should be good. For a long time, markets were expecting that, the margin improvement was always reiterated by the management was not coming. So I think this quarter it's got reflected. So net, it's a good performance, but we'd like to wait for some more clarity and some more inputs from the management.
Avinash, they're saying, in the commentary, they're saying that they've seen a double-digit volume growth coming in. Any rough estimate of what this volume growth could look like?
No, I think, it could be close to, I think, double digits. But if it is beyond, say, 9-10%, I think that's a very good number, because on a higher base, if the company is managed to, show this kind of volume growth, it means that demand has actually picked up pretty well. And I think we like to know, which category of, segments have actually grown, because ultimately, it's finally, they have a large rural base also. Plus, they also cover most of the urban markets. So I think, we like to know which category has grown the fastest. And obviously, overall, if it is more than 10%, I think it's definitely good for the stock. I think the stock should show a good upbeat.
As you rightly mentioned, Nestle is one of those companies that has higher exposure when it comes to urban markets. Do you think that this is an indication of urban coming back strongly?
Yeah, it looks like. I think, frankly, my sense is, they are into product categories where pricing is very competitive, and I think, the demand pool is also very strong. So I think, yes, demand again seems to be coming back in a strong way. And I think hopefully, if this volume growth momentum is sustained, then I think margins also could be maintained. So we'll have to see net from the management what kind of growth outlook they share, post the numbers.
Certainly, Avinash. And one interesting aspect which, Mahima was highlighting in terms of the commentary by Manish Tiwari, the chairman and managing director, he's mentioned that a double-digit volume growth has been achieved, driven also by a 50% increase in advertising spends. Despite that, the margins are at 26.3%. Avinash, while of course we're dissecting these numbers, despite such a high advertising spend in this particular quarter, something that analysts were penciling in, the EBITDA margin number, I think, is just a standout, right, at this point of time?
Yeah, exactly. I think 26% EBITDA margin, Puneet, definitely is a very strong kind of indicator of the pricing power of the company. And I think, the kind of money they have incurred in the advertising, kind of budget, I think finally the payback seems to have come very well. So, ultimately it's a question of payback, how swiftly revenues grow. And I think that has got reflected in the top line and the volume growth and obviously the margin. So I think this is something the markets would definitely appreciate, by giving a thumbs up to this kind of performance.
And just Avinash, one last question with regards to how, we've been talking about this raw material cost inflation, right? Might be something that we pencil in Q1 FY27. But, as per Kotak Securities note, Nestle is the least affected, but still will have to take another 3% hike coming in, which might see impact on volumes going forward. Any thoughts on this?
No, I think, my sense is 3% increase in prices may be staggered. It may not be announced immediately across all product categories, but even if it is done, I think, the company has a very strong product portfolio, very loyal customer base. And I think, to that extent, maybe not in the first quarter, but starting from the second quarter, these prices would be comfortably be absorbed. So I don't think it's going to create a very significant amount of margin dent for them. Of course, in the near term, it could mean a little bit of margin pressure, because they may not immediately increase every product category price. But second quarter, I think things should normalize.
Okay, all right. Avinash, thank you so much for helping us with, all those insights that you gave on Nestle. Most certainly the stock, zooming in trade as we speak on the back of its Q4 numbers, as, has beaten analyst estimates by almost 500 crore when it comes to the top line. Plus, a 12% of increase was what the analysts were expecting versus that of a 22% of increase that's coming on top line. But with that, completely out of time on this edition of Ask Profit, Sachin as well as Radharaman, thank you so much for taking out the time and helping us with all those perspectives that you gave on the stock-related questions. Viewers, completely out of time on this edition of Ask Profit. Do stay tuned. India Market Close comes up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Welcome, you're watching India Market Close, and what a fantastic close it's turning out to be. The cherry on top was Nestle, but even before that, superb strength on the Nifty, pull up the intraday. So a couple of things are happening here. There seems to be more and more signs that there will be a meeting between the US and Israel. One report saying that Trump may make it to the meeting venue as well. So markets have anyway been higher, and then Nestle came in and just gave it that one accelerator, didn't it?
Absolutely. Another instance where you're seeing Q4 numbers that are ahead of estimates. And is this going to be a trend that we see across the board? For the FMCG pack, certainly, but a few more sectors as well. Pull up the heat map for the Nifty 50 and you will see Nestle right on top of the pack today. There you go, Nestle up 4%, but take a look at HUL as well, and we'll pull up the intraday chart. You just saw the Nestle intraday chart, so pull that up again and you will see what we're talking about. That spike immediately after the numbers, it's trading at the high point of the day. But also pull up the HUL chart, because the initial indicators that you're seeing through Nestle might actually flow through to the rest of the FMCG pack as well. So pull up the constituents of the FMCG pack next and see beyond Nestle and HUL whether there are bigger movers. Varun Beverages, Dabur, HUL, Patanjali, Britannia, the whole pack, apart from a couple, are actually at the high point of the day.
No, so Nestle is exciting. I mean, a huge beat on top line. We're going to go across to Mahima for a second. Just want to pull up for you what's happening in the markets before we do that, because yes, Nestle is the big story, but what we're seeing in the markets overall also crucial because of all of the news flow that is coming through. So let's pull up the mid cap and the small cap if we can, those key indices at this point, and take a look at what's happening over there. The mid cap about 0.5% up, so this is more of a Nifty story today, I would say. The small cap, though, about 1% up. Let's pull up the advanced decline ratio, and then we'll give you the market recap as well, right, on what really is happening right now. 1800 to 800 odd is the advanced decline ratio. Beautiful gap over there pairing out. Meanwhile, the sectoral heat map will give you a sense of what's moving, and FMCG, you could have got that spike because of Nestle, but Nifty reality really is the star of the day. Since this morning, you have not just the one company that had its business updates across the board, because remember, it's become an indicator and a play on what is happening with input costs in the war. The only thing in the red is the Nifty CPSE mildly 0.5%
I will also
down.
point out, though, Tamanna, that the Nifty Bank has been trading higher. It's the private sector banks today that are really pulling the weight, and both HDFC Bank, ICICI Bank doing well through the session today.
Delayed response there. So it's a terrific Tuesday. Nifty has gained for a third consecutive session. It's gained over 200 points on an intraday basis. Ceasefire optimism is what has lifted sentiment. It's a decisive close above 24,500, which is clearing a path for a fast move towards 24,800. I mean, it's a while before we even spoke about those levels. 24,600 is the intraday resistance. We'll have to see before the end of trade today, do we hit 24,600? 24,500 and 24,450 are support levels. Value buying is continuing in small and mid caps. Bank Nifty outperforming today, all components trading in the green. Private banks are leading the gains, crossed the key psychological hurdle of 57,000, resistance at 57,700, supports at 57,000 and 56,800, sustaining above 56,500 now is vital. But let's talk about the stock of the morning, stock of the day, I think. Nestle. Mahima, it's a surprise on all fronts. You were talking about a massive top line beat, isn't it?
Absolutely, absolutely, Tamanna. The expectation was that a double-digit growth of around 11 to 12% on the top line, but the top line beat has come in at that almost 23% of an uptake. So it's a big beat coming in, almost a 500 crore beat as compared to what analysts were penciling in. And this is despite of, I think this was the highlight for me, where Manish Tiwari said that this beat is coming in because of a 50% increase that they did in advertising spending. And this 50% increase in advertising spending, despite of that, margins have, upheld and in fact seen 700 to 800, 70 to 80 basis points of an uptick. Margins have come in at that 26% mark versus that of an expectation of 24%. Overall, in terms of revenue growth, 23%, EBITDA growth at 27%. And overall, we've seen a good growth coming in for profits as well as compared to the estimates. I think the key takeaways that all of the products have seen double-digit volume growth coming in. Strongest ever quarterly growth is something that they've posted. Domestic sales, the expectation was that the growth could be around 13 to 14 odd %, which has come in at 23%. I think this is suggesting that probably now is the time when urban recovery is kind of playing its part, and of course the GST rate cut benefits is now flowing in completely for these FMCG companies. Overall, if we take a look at how segments have done, powdered and liquid beverages have seen a high double-digit growth. There's also prepared dishes, cooking aids, etc. that have seen good growth in terms of a value as well as volume goes. And here they have said that this is fueled by engaging urban consumers. Now, this is a important comment coming in from the management. Pet food business has also delivered a double-digit growth, and milk product has also shown a steady growth. They've said that as they look forward, consumers centricity, penetration-led volume growth, reinvestment behind brands, as well as accelerating tech-led sales is something that they're going to focus on. I think even in terms of raw materials, because because coffee prices have continued to trend lower. Plus, cocoa prices is something that have remained subdued, has played its part when it comes to Q4 earnings. But, let me also get in Kaustubh Pavaskar, lead analyst at ICICI, joining us now. Kaustubh, very good afternoon to you, and thank you so much for taking out the time. Your first read in terms of where Nestle earnings go, because it's a huge beat coming in where the numbers are concerned.
So, strong set of numbers, better than what we had Street were anticipating for the quarter. So, 23% growth in the domestic business is much, much better than what we at Street were anticipating at around 15 to 16%. So, I guess all the segments have done well, and they have clocked in double-digit volume growth in all the segments, and I think that has led to the strong revenue growth during the quarter. Also on the margin front, 26% margins improved by 100 bips on YY basis. So again, strong set of numbers on the margin front as well. So overall, it's a strong beat at all levels.
Kaustubh, hi. Good afternoon. Tamanna here. Just trying to understand whether you're seeing any signs of urban consumption recovery in the numbers, and where do you think that top line beat is coming from?
See, this is the first quarter after the entire GST transition. Is that, and what our sense was that food companies will see a faster recovery compared to the other FMCG categories. And I think we are seeing that in the Nestle's numbers. So I believe that on the growth trend this quarter they have done extremely well. I believe other food companies will also follow the same. But if you talk about the sector, I think sequentially most of these companies will deliver good set of numbers on revenue front. Also the margins would also be better on the if you consider it from sequential point of view. But going ahead, you need to wait and watch, how things would be. Because for Nestle, they have said that most of their raw materials have remained behind, but vegetable oil packaging cost, it has gone up. So we need to wait and watch that how things pan out in the quarters ahead. There will be some bit of, there might be some bit of pressure in the near term on the margins, but I believe that if volatility in the commodity prices reduces, I think those margin headwinds will go, and things would be near normal for most of the FMCG companies.
Good afternoon, Alex here. So I take all of the points that you've raised, but just a question here about the fact that the street seems to have underestimated the extent of the tailwinds that Nestle in particular has benefited from in the fourth quarter. So this is ahead of consensus estimates on revenue as well as on EBITDA. Margins have come in ahead of expectations, and therefore it's a beat on the bottom line as well. Double-digit volume growth. I'm wondering how much can this be extrapolated for the rest of the sector? Is there a possibility that there is a significant degree of under-expectation for the rest of the pack as well?
Specifically about Nestle, I think they have highlighted that in their press release that they are spending on their media and advertisement, promotional activities. Also, they are focusing on increasing their distribution strength in the rural market, and also improving their penetration of most of the categories. So I think that is helping, a company like Nestle to drive growth. And as I said, that this was the, quarter after the GST transition. Obviously, most of the companies will benefit, but even Nestle was benefited out of it. So I think the growth has improved. Whether this growth will continue in the quarters ahead, it is, it will be, it is wait and watch. But I think Q4 solid, numbers.
Kaustubh, in terms of volume growth, they've of course mentioned a double-digit volume growth coming in. But as per your analysis, can you help us quantify, by any chance, if you have a number in mind as to how much of a volume growth they would have had? At 12%, 13%?
Very difficult to gauge, the exact volume number, because they don't like that. But I think the volumes must have improved sequentially, volume growth. So there should be a sequential improvement in the volume growth. That is what I feel. but very difficult to give you the exact volume growth number.
Okay. The margins have also been exemplary, actually, at 26.3. The full year average was 23%, just for reference there. Kaustubh, thank you so much for joining us on the show. Sudeep Bandyopadhyay joining us right now for a view. Fundamentally, he's Group Chairman, IndiTrade Capital. We also have Vishnukant Upadhyay, AVP Research and Advisory at Master Capital Services, for the technical view. Welcome to both of you and thank you so much. Sudeep, first take on Nestle, since that really is the talk of the town right now.
Fantastic set of numbers, Tamanna. I mean, I think best ever quarterly result in about a decade. It's much better than what the market was expecting. The best case scenario being plotted was 15-16%. And they have come up with a 23-24% growth on the revenue. So it's fantastic. Margin also has surprised everybody on the positive side. So, and I understand that pretty much all the product lines have contributed. They are talking about urban sales revival, which is very interesting because it will have a cascading impact on multiple other FMCG companies. Nestle was always a well-managed company, and the kind of margin now they are showing 26.3% is really impressive. So yes, it's not a cheap stock. The valuations are rich, but performance has been outstanding, no doubt about it.
Okay. So outstanding on Nestle, Vishnukant Upadhyay, just want to get a Nifty call from you. Even as we're talking about Nestle, and I'll come to you on Nestle, what's the Nifty call right now? Or do you think we can look at 24,600 anytime soon?
Good afternoon, Tamanna. Definitely, prices are heading towards it's a 200 exponential moving average that position somewhere around 24,800. So definitely, we are continuously seeing bullish momentum in the prices. And prices are currently trading up it's a short-term moving averages, that is 21.55, and now heading towards a 200 moving average. But we can expect some sort of profit booking from the proximity of that level. So for the target of 24,700, 24,750, one can go long in Nifty.
All right. One of the reasons why there could be this kind of excitement in the markets as well, one of the reasons are these reports, Alex, and I don't know what you think, saying that Trump may join the Iran talks. Now, this is coming at a time when on the other side you have handles which are supposed to be representing the Iranians, saying that our preliminary team, our secondary team, our zero teams have even left for those talks.
So it's interesting because on the one hand, you have the US that seems to be making a very concerted effort to say that these talks are heading in the way that we want them to head. On the other end, there is actually a lot of disparate information that is coming through. There seem to be three different cohorts that are talking about, okay, possibility of talks. Somebody else is saying absolutely not. And the third person is saying we won't negotiate with this sword hanging over our head. So we don't know from that side what the deal is. I will believe it till when I actually see footage of Donald Trump or any of his representatives meeting with the Iranian delegation.
Yeah, let's see them in the same room. But in fact, let me go across to my colleague Vishal Vivek. He's Associate News Editor at NDTV and he's been tracking this story very closely. Vishal, thank you so much. What is the latest that you're hearing?
See, it's as Alex rightly mentioned, it's conflicting reports coming in from the cohorts. Different cohorts are there. And even from inside Iranian regime, there are two different factions right now that are emerging. The first one, of course, is the Iranian negotiators themselves, who seem to be quite willing to negotiate with the US side. But on the other hand, IRGC's, IRGC regime inside, they don't want the negotiators to budge on any of the points that Iranian regime has been talking about for the last 3 or 4 weeks. So there seems to be conflict, inner conflict going on. On the other side of the spectrum is Trump himself, who has been giving contradicting information for the last 3-4 days. It started on Friday with him saying that a deal is almost finalized. Iran has agreed to almost everything. And now, just about 24 hours ago, he said that he's ready to blow up Iran if the deal does not go through. So what deal was he talking about when he said that Iran has agreed to almost everything? Iran has, of course, completely rebuffed whatever Trump has publicly said. So we'll have to see how all of this, confusion unfolds in the next few hours or so, because we have just about 36 hours before the deadline collapses. And mind you, Trump himself has extended the deadline by about 24 hours. So we have just about 36 hours to deal with this huge problem, following which the war could be escalated to the next level. What that means, only Trump knows. So we'll have to see what Trump says now.
Absolutely, Vishal. Thanks so much for summing that up for us. And so certainly there are a lot of, I think the one way to put this is the only certain factor is that there are so many uncertainties. In that context, what are the individual counters that you should look at? We've taken an index view, but Vishnu, what is the strategy on the individual counters and the technicals that you would suggest?
Alex, currently one stock is on my radar, and that is Neva Bupa. And talking technically, the prices has given a very clear-cut breakout from the falling trendline resistance that had been acting as a very stiff resistance for long. Apart from that, the prices are currently drifting well above its all key moving averages. We can say the cluster of the key moving averages, that is 21, 55, 100 and 200. In yesterday's trading session, we have seen some sort of retracement to the breakout point, but now prices are up around 2%, and we are expecting this bullish journey likely to remain intact with a potential upsurge towards 84, 86. So on the lower side, one can put a stop loss below 77, while on the higher side, 86, 88 sort of levels will be on card very soon.
Got it. All right, let's talk about PNB Housing Finance. And this is the stock of the day today, because what a set of numbers. I guess to a certain extent, the argument can be made that Nestle has thrown its hat into the ring, but purely in terms of the percentage increase that it is seeing, PNB Housing is currently taking the cake. Let's go across to Sharad Dubey, who's joining us now to tell us what is working for PNB Housing. Stellar set of numbers.
A really strong set of numbers, and because of that, the other housing finance companies are also rallying in trade. But I'll give you 5 important reasons why PNB Housing Finance has done well in this earnings. The first and foremost is the retail disbursements that has touched its all-time high levels. Second reason, the cost of borrowings, if you look at it, that has been improving and it's declining since the last 5 quarters. The third reason is that the emerging market segment has done well. Almost, you could say, 31 basis points higher incremental yield has come in if you compare that with the prime segment. The fourth reason is the strong recovery coming in, especially from the write-off pool. Almost 24 crore in retail and 143 crore from the corporate books. And the last reason is the credit cost has been negative for the last 5 quarters, reflecting strong recoveries. And that is where the PAT number also drove the PAT estimates. Now let's look at the valuations of how the peers are looking. We have taken the 1-year forward price to book ratio. PNB Housing Finance trades at 1.2 times. You could say it's evenly posed. Aadhar Housing Finance still cheaper at 0.7 times, and LIC Housing Finance on the higher side, almost 2.5 times its 12 months forward price to book ratio. Let's also pull out the consensus rating for the company itself. Out of 14 analysts tracking the stock, 12 of them have a buy rating, 2 have hold, and not a single analyst has a sell rating. And a 12-month target return potential from the current prices is roughly 8.5%. Let's also see the analysts' views, how things have moved. For UBS, they have maintained a buy stance, and Morgan Stanley, it's at overweight. And interestingly, these are the important target prices from these broking houses. But what's the outlook guidance ahead for PNB Housing Finance? The loan book is expected to grow between 18 to 20% and cross the 1 lakh crore mark by FY27. The return on assets ROA, that's expected to remain in the range of 2.4 to 2.5%. And the yields, that's expected to bottom out and will improve from the first quarter FY27. NIMs are expected to remain range bound between 3.55 to 3.65%. And lastly, the focus would be on the affordable housing and the emerging segment, expected to improve the yields going forward. So this is the important outlook coming in for PNB Housing Finance.
Got it. All right. Let's go across to Sudeep to find out whether he's enthused by this particular housing finance company and what he thinks it means for the rest of the space. Because the entire pack is buzzing today, Sudeep.
You're absolutely right, Alex. I think what is most interesting and heartening for the entire sector is that the retail disbursements are going up, and that's a very, very good trend from a margin perspective because the retail has much better margin compared to corporate loans and larger loans. So smaller loans going up the affordable segment getting more traction is definitely good news for most of these companies, because their earnings will improve, margins will improve, and the risk will get dispersed over a larger number of loans. So structurally, this is good news. And I think, most of these companies focusing on affordable and small loans to retail will benefit. We've already seen, how Aptus and other companies in the private sector have shot up as far as price is concerned. As far as the public sector or semi-quasi-public sector housing finance companies, I think PNB Housing Finance definitely is fantastic performance. But I would also look at LIC Housing Finance. I think there is a scope for significant improvement as far as LIC Housing Finance is concerned on the valuation front. Canfin Homes also looks interesting. So some of these companies definitely will come up with equally good or even better set of numbers. We'll have to keep watching the space.
Okay. The West Asia war has, of course, triggered an energy shock and disrupted global supply chains. It's a different matter that right now and today, at this point in the market, no one seems to care. But what really is the big picture that we're going to be seeing? Avendus Sparks believes that India's macro setup remains cyclically well positioned for a demand rebound, with an expected recovery across credit, consumption, and the manufacturing capex cycle. Vijay Raghavan Swaminathan, the Managing Director and Head of Research at Avendus Sparks Institutional, is joining in to talk more about this. There couldn't be a better time really to have that conversation, Vijay Raghavan, especially in the context of what we've just seen with the Nestle results. Since you're talking about an expected recovery across credit and consumption, are we seeing that playing out already?
Hey, thanks for having me. If you rewind the story on a macro side pre-war, just 45 days back, clearly, macro is well positioned for a combination of credit growth recovery and consumption recovery and capex recovery. Why consumption recovery? This is predominantly because of the efforts taken by the government and the RBI in the last 12-18 months by ensuring that the inflation cycle and interest rate cycle is pretty much intact, due to which we are logically calling for a consumption recovery. And you add the fiscal benefits of government giving GST cuts, personal income tax, all of this lag effects is what is likely to see a consumption recovery is what we called out. Then, the last 45 days, this war-related, disruption came. Now, right now the priority of the government is to ensure that energy availability needs are met. But having said that, whatever construct we were betting on pre-war, those construct is pretty much intact. Is the broader way we are thinking right now. On the earnings side, so the quarter which has gone by, we are fairly confident that the earnings cycle should definitely be good because of the same reasons which I mentioned. Whatever high frequency indicators which we have been tracking, especially in Jan, Feb, March quarter, should logically mean earnings by and large should definitely come better is a broader thinking which we have.
Interesting. What are the threats to that assessment though, Vijay Raghavan? Because ultimately, you're going to have a situation where sooner rather than later, if the situation does not change, you will have prices at the till, prices at the pump that will go up, and that will bleed through to the rest of the system. And so if prices go up, you will have certain companies with leadership that will have pricing ability, but that will have a bearing on demand, won't it?
Yeah, so it depends on the longevity of the war, which is what we mentioned. None of us knows when exactly this war will end, because today is the last day of the 2-week duration of ceasefire. Assuming if this the status quo continues, if the ceasefire movement continues, we still think we have buffers in place, be it on the monetary side or on the fiscal side or on the inflation side. We can manage. Worst case, the Q1 earnings can definitely be tepid, but we still have a lot more firepower for us to come back in the rest of the fiscal year the way we thought through. It's
just to be clear, and okay, so I want to be absolutely certain of what you're saying. So if you're saying that there is no end to this war, but there is a status quo in that there is no additional escalation, right? So what we're seeing right now. Having said that, if this continues for the next 2 quarters, you're saying that only the first quarter will get affected?
No, it depends on where energy prices ultimately settles. So, which is what we mentioned in our note. India never managed any crude oil prices sustaining above $90. Because if it sustains above $90, it will definitely have ramifications on growth. So, which is what we said, rather than taking a call on, when exactly things will settle, it makes sense to have an approach where whether we can see through the crisis better by going back to the shock absorbers. Those shock absorbers suggest that we can manage the situation at this point of time. Obviously, the more it lasts longer, the pain will also be higher. But at this point of time, it is completely uncertain and unpredictable.
Vijay, if I can call you Vijay, if that's okay. Just trying to understand how you are seeing the results that we've seen so far. We've had enough sizable information as far as the IT sector is concerned and private banks are concerned. What has your assessment been of these two spaces?
Yeah, our assessment is, two large banks already announced results over the last weekend. I think nothing much to complain on the earnings which has gone by. So if you look at from growth, margin, and from the earnings growth standpoint, most of them, so far are coming in line with our expectations. We are not seeing any material downgrades at this juncture for the results which has been announced so far, though early days. So we are not going to see any disappointment in earnings trajectory of the companies for the quarter which has gone by.
I'm just referring to your report, and it's all right if you can't comment specifically, but I'm asking in general, based on the thesis that you've just described, Vijay Raghavan, what are the ideas that you are confident about, relatively speaking, at this juncture?
Yeah, relatively speaking, again, I put a caveat, assuming, we put a ceasefire by end of today, assuming this continues. Clearly, where we see margin of safety is the large private banks. The entire banking space looks interesting from earnings comfort and multiples comfort standpoint. That is one pocket where, absolute returns can still be made. The second pocket is select consumer companies which got hammered in the last, say, 45 days of correction. We still think there are good managements out there who can deliver within the consumption cohort, where we can see good earnings recovery prospects in the next 18-24 month cycle. Thirdly, in the whole of manufacturing/industrial space, because we've been quite bullish on this particular segment because of the priority of the government. So we are all aware about the employment issues. Pre-war, the main problem which India macros are facing is the extent of white-collar job creation in the light of IT sector clearly seeing a stagnation. So in our assessment, what can happen is government will give a lot more priority for manufacturing capex once the war-related problem settles. We will see more reforms which will accelerate manufacturing is the broader thinking which we have. So financials, select consumption, and industrials are our preferred sectors.
Okay, and any avoids in that list, Vijay?
Avoid, from a relative standpoint again. So to us, the property cycle, the property developers still, we are not able to, reconcile the demand aspect. Though the listed developers are doing good, but aggregate demand is still not showing any signs of strength. So that is one segment we are completely avoiding. Second segment we are avoiding is any companies whose fortunes are aligned to state government, with state government fiscal not in a great shape. We would like to avoid, state government dependent companies in particular. We want to avoid.
Yeah, Vijay Raghavan, thank you so much for taking the time. Pleasure speaking with you. And by the way, I just want to take you through some of the names that they've listed out, Avendis, in that note that they've sent out. And they were talking about the fact that they're overweight on financials and consumption. That includes auto, industrials, pharma, and healthcare. They're equal weight on IT, telecom, and media. So what do they like? Marico, they say, is a quality pick. They like Indigo, Voltas. They say they're defensive and turnaround picks. Jubilant Food, TVS Motor, and Eternal are cyclical picks. In the industrial space, they're looking at Supreme Industries. They're looking at KPR Mills, Tube Investment. They're also liking Ramco Cement. They're talking about Thermax, ABB, Triveni Turbine, Deepak Nitrate, all of which are cyclical picks. They like TCS and InfoEdge as well as Indus Towers. So whole host of stocks that they've spoken about. Vishnu, if you caught the names that I have just read out to you, which of these would you say are strong when it comes to the technicals and the charts?
So it's I think Triveni Turbine or Triveni Engineering.
Triveni Turbine.
Okay.
And
so,
you can throw ABB into the list as well, and Thermax.
Well, so basically, Alex, ABB and Thermax has deviated too much from their moving averages. So definitely there is a correctional fall due in the market. So let's first, talk about the Triveni Turbine, which has given a very good run up in yesterday's trading session, and currently it is trading with a loss of around 1%. Recently, the price has given a very clear-cut breakout from its crucial horizontal resistance that were aligning somewhere around 550. So it is mildly 20 points above from that area. I'm expecting some sort of corrective fall that should be containing around 560, 550. From that level, we can go long in Triveni Turbine, and stop loss should be maintained below 520, while on the higher side, 640, 660 will be on guard.
Okay, thank you so much, Mr. Upadhyay, for joining us today and adding your views as well. Sudeep, always a pleasure to have you on. We're going to continue all of our conversations here, but it's time for that part of the show that everyone waits to tune in on, where we give you what's heard on the street. We have some exciting stuff today, don't we, Samit?
Yeah, quite a list of stocks that I'm picking up from the dealing room. Firstly, it's on IFL Capital. Now, what dealers are indicating is that there's a buzz of some positive news flow regarding a stake sale that could come in from the promoter side. Large FI could be a potential buyer here for IFL Capital, so keep an eye out for that counter. For Borosil Renewable and Brainbees, buy flows on the large HNI desk. Dealers indicate that prominent HNIs have been accumulating this counter in trade today. Apart from that, there is Industar. Now, there are buy flows on PMS desk. Dealers are expecting some positive news flow regarding either a buyback or dividend that could come in from Industar's side very soon. This announcement is expected. For Nalco, multiple dealing rooms are recommending sell calls to their clients. Now, these are positional sell calls that dealing rooms are recommending, and this could largely be because dealers believe that all the positives are largely priced in for Nalco currently. And lastly, when it comes to 361, there are buy flows on institutional desk that we are seeing ahead of the company's earnings. Earnings and delivery volumes are also expected to be on the higher side. So keep an eye out for 361 as well.
Okay, thank you for that. Please note, when markets are in a good mood, there's always a lot more buzz to talk about. As the market mood goes down, that buzz list also.
By the way, we're 7 points away from 24,600.
Okay.
Or just 4 points away.
4 points, okay.
Points.
Okay, maybe we're going to hit 24,600 in the show. Then we'll get a fresh technical view on what should be the Nifty call. We're taking a very short break. You can't miss today's episode. We're coming back with the top BTST idea and a lot more.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade.
All right, India market close, becoming an exciting show today. Let's just pull up the intraday of the Nifty. We've hit 25,600 and then come off quickly, not by too much though, not by about 40 odd points at that point. So remember, we told you about that's one important mark to look at, but if you do cross and sustain above 24,600, you could be looking at 24,800 levels. Deepak Shenoy joining in now on the show to talk about what's what. CEO, Capital Mind Mutual Fund. We're also joined by Vinay Rajani, CMT, Senior Technical and Derivative Analyst at HDFC Securities. Welcome to both of you. Deepak, is turning out to be a good afternoon. What is it? Is that no one really is too worried about what happens at this meeting, this ceasefire, or it's just such a surfeit of information that's unclear that people have decided to look at what's in black and white?
But to be fair, Tamanna, nobody knows why markets go up when they do. They don't know often when markets go down when they do. So we're all guessing. So if I had to wager a guess, it would be like, oh, the world thinks that we're going to go back to normal. But it might just be a strong rally in a down market. Down market rallies tend to have very, very strong moves, and we've seen this in the past as well. So, it could be just that. So until it breaks back into all-time high territory, in fact, once results come, I think you'll see a lot more focus on, company-specific moves and commentary around how the current war or the situation is affecting companies. That's when you'll actually see some of the changes underlying the companies kind of, reflect into their prices. So we still have a month more of earnings to go. So I'd say, a lot more is to come. However, it does seem like nothing can bring this market down, such as same way as nothing could take the market up last month. So you're in a good phase. Just enjoy it while it lasts, I guess.
I will come back to you, Deepak, on a couple of talking points, but I do want to go first to Vinay Rajani. Vinay, enjoy it while it lasts is the message from Deepak Shenoy. The question is, in your opinion, based on the charts, how long will it last? And will we cross that 24,600 mark? Because we touched that and came off pretty sharply. That is the initial resistance, is it not, for the benchmark?
A rally of 11% from the recent swing low of 22,182, and it is not a Nifty rally, it is also a broader market participation is there. So overall trend has been positive and Nifty is sustaining it high towards the next resistance of 200 days exponential moving average, which is placed at 24,800. And the way broader markets are participating, it seems that even if Nifty comes down, some stocks and sectors will continue to participate very well. Now that we can see that movement is coming in the FMCG now, IT, metal, capital good, power, all the sectors are participating turn by turn. So that is a very good sign. Breadth is improving a lot. So I think market should remain strong in this particular month and coming days. So yes, overall market view is bullish for the short term, and I think this rally is here to stay. Though there could be some running correction on regular intervals as steep rise has been registered, but overall I feel that there will be an opportunity in different sectors across the different sectors. So we will continue to get the opportunity and to generate the alpha in some sectors and stocks from here.
So buy on dip is intact. So what are the individual stocks that you would look at this moment?
So I can see some fresh movement coming in FMCG sector. So one of the stock which I like is the Jubilant Food. So Jubilant Food has given a nice breakout on the short-term charts and got out of the oversold zone. So Jubilant Food, which is trading around, let's say, 469, 472 is looking good for 5 to 7% immediate gain. Today's low should be kept as a stop loss, which is around 453. So Jubilant Food is looking good to us. Another stock from the same sector is the Pidilite industry. Pidilite also is a reversal case, and after long underperformance, this stocks has started getting some traction on the upside. So I think this Pidilite industry, which is placed around 1400 odd level, is headed for 60-70 rupees upside immediately from this level, and the stop loss can be kept at 1380. So these are the two stocks in which I can see a fresh momentum getting built. So Pidilite and Jubilant Food would be my short-term trading picks.
By the way, Nestle is currently trading with gains of 6.7% at the high point or very close to it, and the top performer on the benchmark Nifty 50. Deepak, you were talking about Q4 and the fact that the street will have a decision to make with regard to the direction and pricing of individual stocks based on these numbers. I'm wondering what you thought of these numbers on Nestle, whether you can extrapolate that to the rest of the consumption basket, because Q4 could be good, and whether you're worried at all that this might be a bit of a mirage, because Q1 there will be a bit of a hit.
Both. I think from a FMCG perspective, surprisingly good results. Because usually you would get the 10 to 12%, you're getting 20% plus on a same quarter basis. But I don't remember if there was a one-off last time and there was something else that was happening. But overall, the yearly numbers are still at about 15%. I don't expect this to continue meaningfully going forward. There is, some more of the commentary elements that still have to come in. But I would say this is an interesting first step. So maybe there will be more. FMCG is actually going to do well at this time. Despite some of their input costs going up as well. I would say that's actually a pretty good sign for consumption, especially if there's even more than 12 or 15% volume growth. However, the prices of the stocks themselves are quite expensive. So you're actually betting a lot more on these kind of valuations continuing for the long term, which I think is a little dangerous to, regardless of how good a company is, paying 70 or 80 times earnings. At a 10 to 20% growth, no, it's not going to be meaningfully useful in the long term. You need much higher growth numbers, and I don't think those are going to be as forthcoming. You might get 20% in 1 month, but unlikely in future months, in general, even without a crisis.
Okay.
This is not an industry that moves that fast.
That's true. That's true. I think it's surprised on the positive, and that's why you're seeing that sharp move today. Deepak, please stay on with us. Exclusive news coming in this afternoon on NDTV Profit on IFL Capital. Sources telling us that there's a possible change in the ownership structure that we could see involving Fairfax. Nisha Podar joining on the phone line with more details. Nisha, what are we picking up?
Yes, that's going to be a very big development coming in for IFL Capital. What two important sources with direct knowledge of this development have shared with NDTV Profit is that Fairfax is looking to be the co-promoter and the majority stake owner of IFL Capital, and this will happen in 2 stages. First stage is likely to be where there are advanced talks between Fairfax and IFL Capital currently, where Fairfax is looking to buy close to 10% stake via preferential allotment of shares. So as per the current market cap, 10% is about 1,000 odd crore rupees, and that could be a fund infusion in IFL Capital for the growth of their new businesses in asset management and wealth management. Now, the second one is that after this pref allotment, it will trigger an open offer because IFL already owns over 30% stake in IFL Capital. Fairfax owns. And therefore, after the open offer, it could take Fairfax stake in IFL Capital above 50% and be a majority controlling owner and even co-promoter with the promoter of IFL Capital is what we are gathering. So it's a 2-stage transaction. Of course, the deal is in advanced final stages is what we gather, and it could take a couple of weeks for the announcement to come in. But it's at the final stages, and 1,000 crore rupees of fund infusion as the first tranche is likely to really benefit the company as well. So that's the exclusive detail of this deal development coming in.
Okay, important one there, and we're seeing that stock price spike up even as we're breaking that story. And IFL has been buzzing, featured on Heard on the Street as well this afternoon. Thank you for that, Nisha. Just coming back to the point, Deepak, that of course I'm not going to ask you to comment on this story. It's a breaking story, exclusive story we're doing. But on the point that there is so much happening domestically which has so far not been top of mind. Even I take your point on a company like Nestle and valuations, etc. But the fact that this is one of the best quarters in recent memory, the fact that ICICI Bank is doing what it is doing in a rough phase, and yes, that's a pre-war quarter, but it's doing what it's doing. So some of the numbers on ground that we're seeing are pointing to a stronger fundamental case than is now visible.
Well, I would say doubtful on, say, a bank, because the bank you're speaking of, you're talking about less than 10% growth. I think that is not very good. Yeah, they got there also on the back of lower provisions. Both the big banks have, because of an RBI thing that allowed them to claw back some of the provisions that already put. So I would say, that isn't impressive. Some of the smaller banks, the public sector banks that have announced some results, I think those are more impressive. But a profit growth of 9% in a banking system which is relatively unaffected by these global changes, I would say is a problem. So while the FMCG major has been good, I don't see many great results from the traditionally large companies, whether it is IT companies or the banks so far. We're seeing more interesting results in the mid and small caps. So I think that way, there may be a recovery, but it may be at the mid and small cap earnings level. The larger caps may be more about stability. So I'd still say it's going to take some time. There may be some, because of these changes, there could be some M&A opportunities, and we're seeing some of them happen anyways. There will also be deployment of cash or new capex announcements, especially in the manufacturing and defense spaces. Those will be interesting, but I don't see the current numbers as particularly exciting on the upside, and in fact, surprisingly, not as bad on the downside.
Okay, stay on with us. It's just an afternoon of breaking stories here on NDTV Profit, and we're talking about a story we've been tracking very closely, which is the Karnataka government's new draft guidelines on how alcohol should be taxed. Deepak Bopanna joining in from Bengaluru now with more on this. Deepak, we have some details of the timeline of when this will be implemented. It will take at least another 3 to 4 years for it to actually happen, isn't it?
Yes, they're going to do it in phases, but as far as implementation is concerned, we can expect it in the next few months. They've already right now put out a draft notification. They're saying that the aim here is to really bring about some level of transparency so that everyone, especially the stakeholders who are involved, they can have their say, they can come out and give their feedback as to what will really happen to their business, or whether this is actually optimum for their business, and they consider all of this is what the government at this point in time says. Now, we should note, as far as the Karnataka state government, especially the excise department is concerned, it has been hit with a series of scandals or allegations of corruption at least. So right now what they're saying is that everything that they're doing is in the interest of transparency, to bring a lot of clarity and to remove any sort of roadblocks, be it in terms of licensing. They're saying all sort of payments are being made online. They're saying as far as a yearly licenses, that is being converted to 5 years, and now this entire taxation system, which is going to be a hybrid system of sorts, which is going to involve two ways. One is the alcohol percentage based increase, and also an additional excise duty is going to be added, and it's going to be done in phases so that there's no jolt really for the people or for the stakeholders involved, is what the government right now says.
Okay, we have an exclusive interview as well. Deepak, thank you for that. Basavaraj Raya Reddy, Economic Advisor to the Chief Minister of Karnataka, joining us exclusively on the phone line. Mr. Reddy, thank you so much for speaking with us and giving us some sense of what is the thought, what is the policy initiative that is in mind when these new draft guidelines have been put forth.
Hello?
Yes, Mr. Reddy, can you hear me, sir?
Yeah, of course I can hear you. Yes, right. You are rightly, Deepak has rightly pointed out that now we are issuing a new draft policy on excise. You know that our Honorable Chief Minister has, during the budget, we have made it very clear that we want to go the, taxation on alcohol basis. On alcohol percentage basis, we want to go like a Western style. You know that in Western countries, most of the Western countries, they are taxing and they are charging on the liquor on the percentage of the alcohol content. This is the first time in the India we are doing. Hopefully that we'll get a good revenue. There will be a lot of pilferage will come down.
Sure. Mr. Raya Reddy, so you're absolutely right in that we've spoken to a representative of the industry, and they said that they're very positive on this. They were surprised that this came through because it's not heard of before in India. The only point is that the implication of it is that the lower priced alcohol at this stage might actually see a higher price increase. So is that something that you're receiving as a representation? Is the industry talking to you about?
You know that higher brand like Blue Label, Black Label, or whatever the higher brand whiskies, you know that they have a more liquor content. So if you bring this, you know that they can, the common man can also, middle class, higher middle class people can buy that.
Okay. No, so Mr.
At a reasonable price.
No, Mr. Reddy, the understanding is, and what all of the analysts that we're speaking to who track this sector very closely, what they are saying in their outcome is that as a result, the amount of taxation on less premium brands will be higher because of their alcohol content, and on premium and above will be lower. There might be exceptions, as you mentioned, but largely it will be the other way around.
Yeah, definitely. But you know, during starting days, it may be little difficult, and definitely in the course of 2-3 years, I think it will be all right.
What is the feedback you're getting from industry so far? Because you have barely a week before you want to implement it.
I mean, industries are welcoming it. You know that already shares and everything on the because of this announcement, most of the companies' shares have gone up. There is a issue. There is a little issue in the this beverage manufacturers, especially in Karnataka. You know that they may have afraid that if the high brand has rates have come down, their sales might be coming down. It is not like that. I'm sure that in a course of time, it will be okay.
From a revenue standpoint as well, Mr. Raya Reddy, I'm sure that certain studies will have been done in the formulation of this policy. What is the expectation on how this will pan out?
I'm expecting another 5,000 crores extra tax will come to the Karnataka.
In FY27?
If you bring this alcohol content, you know that it is called beverage, this thing. Definitely we may get about 5,000 crores extra.
This financial year itself, sir?
Maybe not this year itself. Maybe you may get over 2,000-3,000 crores this year, maybe next year. There are so many things. It takes 3-4 years, you know that, because it's the first time in this kind of measurement is taking in India. No other state has done.
Mr. Raya Reddy, just to understand, this extra 5,000 crores or 2,000 crores in 1 year, it's going to come from the alcohol beverage makers, right? So will their taxation go up significantly?
Not beverages, consumers, you know. Consumers as well as. Consumers are, it is going to be friendly.
Friendly? If it's friendly, sir, then how will the revenue go up? Are you thinking volumes will grow?
Because, yeah, definitely. Because good brand, like I told you, know that good brands, the rate will come down, and lower brands are a little bit going to be costly. Let us see. We'll work out. And secondly, what Deepak has said, I mean, Open has said right. You know that the total we are bringing transparency, especially in the excise department transfers. There will be no influence, there is no corruption, everything. You know that this time everything do counseling on counseling basis.
Mr. Raya Reddy, you're saying this is the first time in India. It indeed is. Do you anticipate that other states will also follow Karnataka's
Maybe. We don't know. We are just trying. We are trying. You know, the Karnataka is a pioneer in taxation. Even including GST also, we want to start it in India first only.
Thank you so much, sir, for joining in and giving us clarification.
Let's see that the new system, how it will work.
Yeah, we'd love to have you back once it's implemented.
Alcoholic content basis and taxation, let us see how it will work.
Sure.
I'm expecting 4,000 to 5,000 crores extra. Thank you.
Okay. Thank you so much, sir. That was Basavaraj Raya Reddy, that's the economic advisor to the Karnataka Chief Minister, talking about the new policy and some great insights there coming in. Deepak, have you been looking at this space at all? I know you'll not talk about stocks. I'm well aware of that. But have you been looking at this space at all? We are learning new lessons about how much alcohol content in which brands during this interview. But if you have any insights on this story that we've been tracking?
No, it's a good exercise to figure out what has more alcohol and what doesn't in the even in and what does it mean, from a taxation perspective? I know that
it's in your state, Deepak. As a Bangalorean, how are you feeling about it?
It's the tax for sin, right? So it's almost like alcohol is not a necessity. It's the equivalent of something like this is not it is not considered bad to tax. It's like taxing cigarettes. You tax alcohol more. Not many people will care beyond a certain point. Sure, it will get more expensive perhaps at the lower end, but you can expect that the government, which has only a few elements, the state government has only a few elements it can tax. There's property tax, there's road tax, there is perhaps this liquor tax and whatever comes on petrol and diesel. So I think those are the elements you can expect they'll try and move. They won't try to hit the others. The petrol, diesel has a much larger impact and it's a necessity. So alcohol is easy. So you target it when you can. So I think Karnataka has seen many of these, about maybe 10 or 15 different points in which we've had a rationalization change. They changed wholesaling from private to only state-owned. There's been different layers of excise duty changes in the past. So I think, now it's an exercise for us to figure out which drink has how much.
Yeah.
But I don't think your prices at the pub will change even a little bit. Right now, they will only go up.
The true Bangalorean has spoken and come right to the point. Prices at the pub, that's what matters. Okay, we're going to quickly cover HCL Tech before markets close because the numbers will come out later today. Jasmeet is joining in with what to expect.
Well, thank you for that. We're expecting a weak quarter for HCL Tech's result this time. Overall revenue is expected to remain flattish, but the EBIT is something to watch out for. We expect a EBIT margin to see a downtick of 100 basis points and overall EBIT to see a downtick of 5%. Now, in terms of net profit, that's expected to see an uptick of roughly 14% on the back of the low base we saw in the previous quarter, which was on the back of the new labor code. Apart from that, this quarter we are penciling in a negative CC growth altogether by nearly negative 1.7 to negative 5%. If we look at the overall IT business, it's expected to do well for the company, but the software business, that's where the problem comes in. Expected to overall see a degrowth in terms of impacting the margin. While margins are also getting impacted by the wage hike and restructuring, which we'll be seeing in this quarter as well. Apart from that, the commentary on overall AI revenue, AI deflation, and further restructuring plan of the man will be in focus. Now, in terms of the guidance, that will be something to watch out for, given brokerages are expecting a guidance between 3 to 6% for the overall FY27 going ahead. It's a wider range compared to what we saw in FY26. And apart from that, management did sound confident in the previous quarter for the EBIT. So we expect an uptick in terms of the EBIT overall margin as well. So all in all, we expect a weak quarter, but strong guidance coming from the management for the Q4.
Got it. Okay. Thanks so much for that, Jasmeet. Let me go across to you very quickly, Vinay, on IT and specifically HCL Tech. Would you buy?
HCL Tech specifically is consolidating, and last week we saw a high of 1475, so that is an immediate resistance. Before that, I would not take a long bet, so let us wait for this resistance to be taken out, which is at 1475, above which we can expect trading gains further. But till then, wait and watch approach should be there.
Okay, on that note, Vinay, as well as Deepak, thanks so much for taking the time and for speaking to us on India Market Close. It's an exciting day. We've had a great show and the market has had a great day. 24,570. We're ending not at 600. We're off that point, but we did hit it during the day. Nifty Bank has done particularly well for itself, 1.4% higher. The real stars of the show today on the sectoral front are FMCG, the Nifty FMCG index, as well as the Realty Index. Pull those two up if you can, so that we can have a look at those two, or just pull up the sectoral indices and we'll have a look at the entire pack as a whole. Okay, so there you go. So 3% gains for the FMCG index, and pull up the Realty Index as well, which has done incredibly well, up about 2%.
The advanced decline ratio is not is good, but it's not that great. I just want to pull up the intraday for the advanced decline ratio. And so I wouldn't say that there's nervousness or anything like that. It's closed off a bit. It's closed off a bit. Remember, you are going into a very crucial 24 hours. And there are enough people now in the market who've clearly stuck their necks out and said that it's not, no one's going to be trigger happy. Let me just put it that way. No one's going to be trigger happy in the next 24 to 48 hours. And that seems to be bet over here. But there is that kind of hesitation. Otherwise, all things considered, we should have done much better. Let's pull up the Nifty heat map. And of course, Nestle is there, top of the charts. Fantastic quarter.
It's a good
8% up. 8% up on Nestle. When is the last time we saw an 8% uptick on results on Nestle? So exciting. I think this is the second or third quarter after Manish Tiwari has taken over. It'll be interesting to see what his take is. HUL is riding that wave. Trent has its own jig going on because of the bonus in the rights issue, but also with this. Bajaj Finance, I mean, I'm Tata Consumer. All of this is telling me, even an ICICI, HDFC Bank, is this the return of urban consumption story that we're seeing with Nestle?
I certainly hope that that is indeed the case. My only worry, though, is if this continues for another couple of weeks, you will see prices at the pump go up. And eventually that's going to flow through the system. So the positive triggers that we're seeing on consumption right now, on volume growth, HUL in all probability is going to have a pretty decent number on the volume side, which is why it's going up as much as it is right now. But we're seconds away now, 8 seconds away from closing. And let's have a look at where the benchmark ends today. It's ending at about 200 plus points higher, 220 points higher, just about 20 points shy, the last tick of that 24,600 mark, which remember is the 200-day exponential moving average and a key resistance hurdle to cross. I wonder if that is done tomorrow.
Yeah, all things, if they remain as they are, definitely we're looking set for that. Maybe a bit of a run-up in Nestle, HUL and Trent could continue tomorrow as well. Keep in mind, HCL Tech will be in focus. SBI Life also will be reporting next couple of days. That will be in focus as well. So keep in mind that those are some of the numbers that you should look at. SBI Life has actually ended quite poorly. Want to pull up the top gainers and losers just before we wrap for the day and on this show. And I wonder if stocks like PNB Housing, etc. have still managed to stay up there. They have about 8.5% up. Lemon Tree buzzing today, 5-star buzzing today. So all of these stocks doing well. Realty stocks were doing very well today. On the losing side, Rajesh Exports, maybe they're not getting that much of a refund from the United States government. That was a big story, wasn't it? The other one. That's a big story, but we had so much news flow today, but that's a big story. Watch out for companies which are going to be getting refunds from the US as that tariff was struck down. Natco Pharma, Shah Metallics, among the other ones which are not doing too well. But really, that's all the time we have on the show from Alexa and the team that put the show together. Thank you so much for watching. Stay tuned. Market Express up next.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Hello and welcome. You're watching Market Express and I'm Himakshi Bhavna. Let's get straight into the show and see how the markets have really fared today. So viewers, peace hopes powered a rally on the Lal Street today. The Nifty sprinted past 24,500 levels while the Sensex has also surged over 750 points as optimism around de-escalation lifted the risk appetite across the board. And it was a sea of green on the Lal Street. FMCG and realty have led the charge, while pharma stood out as the lone laggard as broad-based buying has lifted the market. Now let's look at some key earnings for today. First up, we have Nestle India. It has delivered a blockbuster quarter 4, comfortably beating the street expectations across the board. If you look at the net profit, revenue and EBITDA, so all of them have come in well ahead of the estimates, with margins also expanding strongly. The quarter has marked Nestle's strongest growth in nearly a decade, and this is driven by double-digit volume growth and also operating leverage kicking in. Input trends were largely supportive. Coffee prices have eased on better crops in Vietnam, while higher edible costs have linked to crude prices were absorbed through scale and mix. And the company has also announced a final dividend of 5 rupee per share, capping off a standout quarter. Let's look at some brokerage notes for Nestle. So after it has delivered another blow-away quarter with operating leverage finally kicking in, a sharp 50% jump in ad spends is also translating into the growth, as 3 out of 4 categories have clocked strong double-digit expansion. Unlike last quarter, EBITDA growth has now outpaced the revenue, and this is highlighting the payoff from the investing aggressively behind the brands. And viewers, next up we have PNB Housing. It has delivered a steady quarter 4, and this is led by improving margins and also healthy growth momentum. The lender has reported strong growth in AUM and disbursements, and this is supported by easing funding costs and also a sequential improvement in the margins. If you look at the total income, so it has risen 7% year-on-year, while NII grew 11%, and all of this is reflecting improving business mix. Affordable and emerging segments now form 40% of the retail book, and if you look at the branch expansion, so it has continued at a healthy pace, and collections and operating efficiency, they have remained stable, reinforcing confidence in the growth trajectory. Next counter in focus is E2E Networks. It has delivered a standout quarter 4, and this has been marked by sharp acceleration across metrics. Revenue has surged nearly 37% quarter on quarter, while EBITDA has jumped over 46%, and this is driven by scale up in H200 GPU capacity and also rising cloud demand. Margins have expanded meaningfully. Finance costs have eased, and the company has returned to profitability after 3 quarters of losses. And adding to the momentum, E2E has reported its highest ever monthly recurring revenue, also underlining improving visibility and operating leverage. Next counter in focus is Hindustan Copper. It has sharpened its Vision 2030 roadmap, also signaling an aggressive scale-up in mining and also a clear diversification push. So the state-owned miner lines up a heavy investment cycle to nearly triple copper output, improve the profitability, and also step into areas like critical minerals and also renewable energy. Next in focus is SML Isuzu. So it has posted a steady March quarter show. Revenue climbs at a healthy pace, and this is driven by volumes, but operating profit stays flat as margins come under pressure. And net profit still edges up, but higher costs weigh on the overall profitability this quarter. In fact, brokerages stay broadly positive on Grow after a strong 4th quarter. UBS holds a neutral view but also lifts its target, citing operating leverage and also market share gains. And Jefferies remain bullish, pointing to new growth drivers and also better profitability. Citi also stays constructive, seeing steady execution and gains from higher trading activity. Keeping with the brokerage notes, JP Morgan has turned positive on PhysicsWallah, initiating coverage with an overweight call. The brokerage sees the online education platform as a strong growth story, and this is backed by a large market, disruptive pricing, and also a profitable core business. So the offline foray adds optionality, while margins and growth remain pretty attractive. And keeping with the earnings momentum, we have Nelco now, which has delivered a solid quarter 4, and this is anchored by strong top-line momentum. Revenue grew over 17% year-on-year, reflecting steady business traction, while the EBITDA has softened. Management continues to invest in growth even as the company returned to profitability after last year's loss, and this has been aided by the tax efficiencies and also balance sheet optimization. The market is clearly encouraged by the earnings turnaround and also revenue strength. The stock has jumped today and is up more than 45% in April, also signaling renewed investor confidence. And US Bank of Maharashtra has laid out an upbeat but measured growth roadmap. Management speaking at the fourth quarter earnings con call, they've guided for a total business growth of 16 to 17%. Advances are expected to grow at about 18%, outpacing the system, while also deposit growth is seen between 14 and 15% going ahead. The guidance reflects confidence in loan momentum, even as lenders remain focused on balancing the growth with funding and also liquidity discipline. And talking about the core sector data for March, which is offering a positive signal for fertilizer stocks. Strong output numbers point to healthy operating momentum across key players such as FACT, Deepak Fertilizers and also Paradeep Phosphates, are also reflecting resilient demand and steady production activity. The data suggests fertilizer company has entered the new quarter with better utilization and also inventory alignment, supporting volume visibility even amid global uncertainty. And for the market, this acts as a constructive read through on earnings durability as fertilizers names balance input cost risk and with the ongoing demand from agriculture and allied sectors. In fact, the government is preparing India's Semiconductor Mission 2.0 with a proposed outlay of 1.2 lakh crore rupees. So the second phase aims to build on the success of the first phase by attracting more investments in chip manufacturing, assembly and design. And it will focus on expanding the ecosystem for advanced nodes, compound semiconductors, and also supporting the infrastructure. The mission is expected to create thousands of jobs and also strengthen India's position in the global semiconductor supply chain. Officials said that detailed framework and incentives will be finalized pretty soon. And viewers, Fairfax is in advanced talks to acquire close to 10% stake in IIFL Capital through a preferential allotment of shares. And this transaction, if completed, would make Fairfax the co-promoter and majority stakeholder in the company. The deal is in its final stages and is expected to be closed within few weeks. So the funds raised will be used for growth capital in the wealth and asset management businesses. And at current market price, the 10% stake is valued at around 1,000 crores. Fairfax already holds over 30% in IFL Capital. Neither IFL Capital nor Fairfax has commented on the development. And Inox Clean is reportedly reviving plans for an initial public offering that could raise up to $1 billion. The company, part of Inox Group, is one of India's largest providers of industrial gases and is also exploring a listing on Indian bourses. The potential IPO comes as the company looks to capitalize on the strong growth in the industrial gases sector and fund expansion plans. Sources indicate that the firm is in early discussions with investment banks to revive the fundraising processes, and if successful, it would be one of the largest IPOs in the Indian market this year. And Reserve Bank of India Governor Sanjeev Malhotra has said that domestic production of oil and gas is being ramped up to reduce dependence on imports amid the ongoing Middle East crisis. And speaking at an event, the governor has noted that the government and the industry are working together to increase the output from existing fields and also accelerate exploration activities. And this step is aimed at ensuring energy security and also insulating the economy from global oil price volatility. Your South Korean tech giant Naver Corp has signed a memorandum of understanding with Tata Consultancy Services to explore collaboration in artificial intelligence, cloud computing, and also digital transformation. So the MOU aims to combine Naver's advanced AI capabilities with TCS global delivery expertise, and the partnership is expected to focus on developing AI-powered solutions for enterprises and also accelerating digital innovation for clients worldwide. Now, both the companies see significant potential in leveraging each other's strengths to tap into the growing demand for AI and cloud services. Sony Pictures Networks India has secured the exclusive broadcast and live streaming rights for the 2026 Asian Games. Now, the multi-year deal covers both linear television and also digital streaming platforms, and this will allow the Indian audiences to watch the prestigious multi-sport event live across Sony's channels and is also on its digital platform. So, the Asian Games 2026 are scheduled to be held in Nagoya, Japan. And Apple has named hardware chief John Ternus as its next CEO, signaling a major leadership transition. And Ternus, a 25-year Apple veteran, will take charge on September 1st, succeeding Tim Cook, who moves into the role of executive chairman. And under Tim Cook, Apple has transformed from a premium hardware company into a diversified tech ecosystem giant. Market cap rose from about $350 billion in 2011 to over $4 trillion, driven by services expansion, in silicon, massive buybacks, and even tighter integration across iPhone, Mac, wearables, and also subscription. Amazon is set to invest in an additional $5 billion in Anthropic, which is the artificial intelligence company behind the Claude models. And this brings Amazon's total investment in Anthropic to $8 billion. And the new funding will be used to accelerate Anthropic's AI research, expand its computing infrastructure, and also develop more advanced models. And the partnership with Amazon provides Anthropic with access to AWS's powerful cloud infrastructure. In return, Amazon gains deeper integration of Anthropic's AI technology across its products and even services. Now let's look at some national news now, viewers. Defense Minister Rajnath Singh has arrived in Germany for a 3-day official visit. During the stay, he's expected to hold bilateral meetings with German Defense Minister and also other senior officials. The visit aims to strengthen defense and strategic cooperation between India and Germany. Key topics likely to be discussed include joint military exercises, defense industry collaboration, and also technology transfer. Rajnath Singh's visit is part of India's efforts to deepen ties with key European partners in the defense sector. And the Kedarnath temple authorities have imposed a complete ban on mobile phones inside the temple premises to maintain sanctity and even improve crowd management during the ongoing yatra. Devotees will now have to deposit their phones at designated counters before entering the sanctum sanctorum. Now, the decision has been taken to reduce distractions and also ensure a more peaceful darshan experience. Security personnel will enforce the rule pretty strictly, and the ban will apply to all the visitors, including VIPs. And this is part of broader measures to streamline the yatra arrangements and even enhance the spiritual atmosphere at the revered shrine. And India and the United States are moving from intent to execution on trade. Officials from both the sides have begun detailed discussions on a proposed bilateral trade agreement, shifting focus to the fine print, tariff structures, market access, and non-tariff barriers. The talks follow a series of high-level political engagements and are aimed at crafting a comprehensive pact that could significantly lift two-way trade. Sectors like agriculture, technology, and services are firmly in focus with negotiators, describing the discussions as constructive and even anchored around a balanced, mutually beneficial outcome. Let's look at some international news now. Iran has toughened its tone just ahead of renewed peace talks with the United States in Islamabad. Parliament Speaker Mohammad Bagher says that Tehran will not negotiate under the shadow of threats, accusing President Donald Trump of trying to replace diplomacy with coercion. Now, his comments follow Trump's warning of military escalation if no deal is reached before a fragile ceasefire expires Tuesday evening. Now, tensions remain elevated, with the U.S. maintaining a naval blockade around the Strait of Hormuz and Iran warning of retaliation, also injecting fresh uncertainty into prospects for de-escalation even as talks are set to resume. And diplomacy is now being steered from the very top. U.S. Vice President J.D. Vance is set to lead the peace talks with Iran in Islamabad as a fragile ceasefire heads towards its deadline. Now, there's been mixed messaging from Washington, with President Donald Trump saying that the U.S. delegation is already mobilization ready, even as other reports suggest that timelines remains pretty fluid. The talks comes with the ceasefire expiring Tuesday evening after sharp warnings from Trump of military escalation if no deal is reached, with J.D. Vance at the helm, and the ceasefire has effectively been pushed into Wednesday, buying time but not certainty. And Pakistan has put a proposed $1.5 billion weapons and fighter jets package for Sudan on hold after Saudi Arabia has objected and asked that the agreement be terminated and decided not to finance the purchase. This is as per the Reuters sources. Now, the pause is a setback for Islamabad's push to scale defense exports, especially after Pakistani aircraft and systems have gained greater attention following last year's India standoff. Now, Reuters have even reported earlier this year that Sudan deal was in its final stages and also brokered by Saudi Arabia through Riyadh's funding role wasn't public then, and Saudi Arabia remains a key financial ally for Pakistan, and ties deepened after a mutual defense pact signed last year. And Pakistan has extended its ban on Indian aircraft using its airspace for another month. The Pakistan Airports Authority has said that all Indian registered, leased, commercial and military aircraft will remain barred until 5 a.m. on May 24, 2026, continuing the restrictions in place since April last year. Now, the move follows heightened tensions after the Pahalgam terror attack, which India blamed on Pakistan, an allegation Islamabad has rejected, calling instead for a transparent inquiry. Now, the closure has hit Indian airlines hard, forcing longer routes for Gulf flights and also adding to cost, while India has responded with a reciprocal ban on Pakistani carriers. And Japan has taken a landmark step in defense policy, easing long-standing restrictions on weapons exports for the first time since World War II. Now, the cabinet of Prime Minister Senete Kachi has approved, changes allowing Japanese companies to sell arms overseas, significantly widening the scope beyond non-combat equipment such as rescue and surveillance systems. Now, the government says that the move is aimed at strengthening Japan's defense industrial base and also responding to a rapidly changing security environment while still upholding its core commitment to pacifism. Now, the shift marks a major recalibration of Japan's post-war security stance, with implications for regional defense cooperation and also global arms markets. And viewers, U.S. Labor Secretary Lori Chavez de Rima has resigned from President Donald Trump's cabinet. Now, the White House confirmed her exit early Tuesday, saying Chavez de Rima will leave government to take up a role in the private sector. Her resignation comes amid an ongoing misconduct investigation by the Labor Department's Inspector General Chavez de Rima, and it becomes the third cabinet member to depart during Trump's second term, following Homeland Security Secretary and Attorney General Pam Bondi. Now, Deputy Secretary Kate will serve as acting Labor Secretary as the administration manages another high-profile exit. And viewers, Pen Murudhar Entertainment has reportedly acquired all India theatrical distribution rights for Shah Rukh Khan's upcoming film King for 250 crore rupees. Now, the deal was finalized after competitive bidding involving multiple major distributors, underlining strong confidence in the film's box office potential. Now, the film is expected to release during the Christmas 2026 window, a period that will also see major global releases. And with that, viewers, it's a wrap on this edition of Market Express. Stay tuned to NDTV Profit for more news and updates.
कुछ खास होने वाला है।
From the factory floors of Guangdong to the policy corridors in Beijing, what is going to be China's next political economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with me, Gauri Dwivedi.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show. Just
Nifty rallies third straight day closes above 24,550. Broader markets show mixed performance. Most sectors ended the green. Oil softens amid mixed messaging on US-Iran peace talks ahead of the ceasefire deadline. Crude hovering below $95 per barrel. Reports suggest Trump likely to join peace talks if deal is reached in Islamabad. Trump could attend the talks in person or virtually. India and United States are set to resume next round of negotiations in Washington, D.C., aimed at advancing the first phase of the proposed bilateral trade agreement amid shifting global tariff dynamics. After Supreme Court strikes down Trump tariffs, U.S. launches $166 billion refund process. India-linked repayments seen reaching up to $12 billion. And sources tell NDTV Profit that the government is set to roll out an expanded India semiconductor mission by May, and the plan could see an outlay of around 1 to 1.2 lakh crore rupees aimed at boosting India's chip manufacturing push. NDTV Profit exclusive sources say Fairfax looks to be controlling stakeholder and co-promoter of IFL Capital, is in talks to acquire an additional stake in IFL Capital Services through a preferential allotment of shares, deal in final stages. Tim Cook steps down as Apple CEO and passes the baton to John Turner's Cook 15-year stint ends in September. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar. Let's take you through the top story that we are really covering today. Talks or no talks, uncertainty really continues as mixed signals emerge from both Washington DC and Tehran. Even as the current ceasefire is set to expire tomorrow, reports do suggest that US President Donald Trump may join the discussions in Islamabad with Vice President of United States of America, J.D. Vance, expected to arrive on Wednesday. However, there has been no official confirmation from either side so far. Preparations in Islamabad have been underway for the past 3 to 4 days, and the key question now is when and whether these talks will actually take place. Despite the ambiguity, there is growing expectation that behind the scenes diplomacy is actively going on as all sides weigh their next move ahead of the ceasefire deadline. In fact, my colleague Vishal Vivek shares all the details.
It's conflicting reports coming in from the cohorts. Different cohorts are there. And even from inside Iranian regime, there are two different factions right now that are emerging. The first one, of course, is the Iranian negotiators themselves, who seem to be quite willing to negotiate with the US side. But on the other hand, IRGC's, IRGC regime inside, they don't want the negotiators to budge on any of the points that Iranian regime has been talking about for the last 3 or 4 weeks. So there seems to be conflict, inner conflict going on. On the other side of the spectrum is Trump himself, who has been giving contradicting information for the last 3-4 days. It started on Friday with him saying that a deal is almost finalized. Iran has agreed to almost everything. And now, just about 24 hours ago, he said that he's ready to blow up Iran if the deal does not go through. So what deal was he talking about when he said that Iran has agreed to almost everything? Iran has, of course, completely rebuffed whatever Trump has publicly said. So we'll have to see how all of this, confusion unfolds in the next few hours or so, because we have just about 36 hours before the deadline collapses. And mind you, Trump himself has extended the deadline by about 24 hours. So we have just about 36 hours to deal with this huge problem, following which the war could be escalated to the next level. What that means, only Trump knows. So we'll have to see what Trump says now.
All right, Wednesday is going to be hectic when it comes to negotiations. Islamabad is the place that we are talking about, is going to be that ground zero of the negotiations. Now, blaring sirens were heard across Israel today, but it was not an emergency alert. Rather, it was a solemn siren to really remember all the soldiers who sacrificed their lives for Israel. Take a look at Pradeep Datta's report from Tel Aviv.
This siren sound is different. This is not for the people to rush towards the safe shelter. This is basically remembering all those brave hearts who had stood for the country, who stood like a rock for the country. This is their way of paying gratitude, because it's a part of the Memorial Day. It started yesterday evening at about 8 and it will continue. And finally, there will be Independence Day celebration. Here you can see everybody right now standing. Everybody here is standing and they are observing. You can see each one of them. They are standing. The 2-minute silence will be observed, where they will be paying homage to all those fallen soldiers who sacrificed their life, laid down their life for the country. And here, everybody, the siren sound is going to continue for about 2 minutes, and 2-minute silence will be observed. They feel that it is because of them that they are able to live peacefully, they are able to see this day today, and they are able to celebrate their Independence Day with head held high on shoulder. And here on the shores of Mediterranean Sea, you can see all the activities have come to screeching halt, and everybody here had been observing this thing religiously. All of them had been standing here silently, paying homage to all those soldiers, because they feel it is because of their supreme sacrifice that they are able to see this day. Let me show you again. Here on the banks of, now the siren has gone off, and once again back to activity. This is a part of their Memorial Day. Every year they celebrate, it's like just observing this day, and this is followed by the celebration of Independence Day. Let me talk to people here. How important is this day for all of you?
It's incredibly important. In fact, you ask me to put words to describe it, and that's not really possible. For people around the world who try to understand it, they have to come here and actually experience what this day means for the Israelis especially with the build-up from last week, Holocaust Memorial Day.
All right, coming back home, let's take stock of the rupee movement. It settled at 93 rupees 49 paise against the dollar after a volatile session, tracking pressure from elevated crude prices as well as the global uncertainty. Crude prices, they remain elevated, with Brent hovering around the 95 per dollar range and WTI nearly $88 per barrel mark amid the ongoing geopolitical tensions. Now, the sharp move in oil continues to keep the pressure on the Indian currency as well. So that's really impacting the Indian market, both money as well as equity. Now, after tracking the latest moves in crude, well, the market expert David Roche says that oil remains the key variable to watch in the current scenario. He adds that prices may not spike significantly if the US steps back from the Middle East, keeping the focus firmly on geopolitics and also the energy markets. Let's listen in.
There are no tankers moving. And I'm not just talking about the Gulf. I'm talking about the Red Sea. The oil coming out the Yanbu pipeline, the oil going through the north of the Red Sea to Europe, all of that, it's just not moving. The US blockade is now so successful militarily that there's no oil moving. And no oil moving means there's no ability for the economy, the global economy, to put fuel in its tank. So let's come back to that. If Trump leaves the Middle East and surrenders, basically giving Iran control of the Gulf, the oil will not move either. If he stays and he fights, then the oil will not move either. So essentially, we're looking at an exercise in a huge credibility gap between the indifference of the markets and the reality of the economies when it comes to the oil supply.
All right, let's take stock of Indian equities markets as well, and the benchmarks, they continue to trade on elevated levels through the course of the trading day today, while the Nifty closed sharp above 24,500 levels, while the Sensex recorded a 600-plus point gain today. HDFC Bank, ICICI Bank were amongst the heaviest uplifters in trade for the benchmarks. Nestle, too, ran over 8% higher post the Q4 results. In fact, my colleague Parth is joining in with a detailed market watch and the action today. Parth, tell us.
Nifty has ended in green for the third day in a row. Nifty closed above 24,550, gaining over 0.75% today. Nestle and Hindustan Unilever were the top gainers in Nifty, in which Nestle gained over 8% while HUL gained over 4% today. The broader market showed a mixed performance when compared to the benchmark, where we saw Nifty Midcap 150 gaining over 0.5%, which was led by Deepak Nitrite and Bank of Maharashtra, both of which were up by over 6% today. On the other side, Nifty Small Cap 250 gained over 0.7%, which was led by Elecon Engineering and Lemon Tree Hotels, both of which were up by over 8% for the day. Moving on to the sectoral performances, we saw Nifty Pharma, Nifty Metal and Nifty Oil and Gas ending on a flat note, while all the other sectors ended on a green note. Nifty FMCG was the top gaining sector today, which was up by over 3%, led by Varun Beverages and Nestle. Nestle gained over 8%, while Varun Beverages gained over 4% today. Nifty Auto, Nifty PSU Bank, Nifty Financial Services and Nifty Bank ended in green for the third day in a row, while Nifty IT snapped its two-day losing streak.
Dinshaw Irani, who's the CEO at HCL Capital, predicts that the first quarter will be the worst quarter. This, he explains, as a result of the expensive inventory that will most likely increase the costs for the companies. Now listen in to his whole argument in a conversation with us earlier in the day.
I think Q1 is going to be the worst quarter. Q4 will still be manageable because it's only 1 month of conflict. And frankly, I mean, you haven't seen any cost escalations being passed on. Also, there was inventory lying with most of the manufacturers. So they had this low priced inventory that they could have used as such. But going into Q1, I think this is the quarter which one has to look out for, because obviously the high cost inventory is going to hit them this particular quarter. And obviously, I mean, looking at the way The manufacturers they have not been passing it on to the consumers today.
All right, Q1, it could be the sore point we are watching out for. But let's talk about the Q4 results trickling in. The biggest of all today so far has been Nestle India, and the shares of the company sprinted over 8% higher after the company delivered its strongest quarterly profit growth in nearly 10 years. Despite a one-time loss of around 36 odd crore rupees, the FMCG giant's net profit beat the estimates, the bottom line at 1,114 odd crore rupees, while the revenue as well as the EBITDA saw double-digit growth too. In fact, all the business channels really saw significant expansion for the company. Nestle India will also pay a final dividend of 5 rupees per share. So overall, a robust Q4 as Nestle clocked out of this financial year. Now, the capital market linked stocks are seeing a sharp rally in the month of April, led by strong retail participation and also sustained interest coming in from both HNIs as well as the institutions. My colleague Sharad joins in with more details on that. Sharad, tell us.
Further re-rating, or are the valuations turning expensive? In April itself, you see BSE, that stock is up almost up 30%, Grow up 22%, Angel One, MOSL, all of them doing well in trade, stocks going up more than 20%. But let's find out the key reasons for it, why this is happening. The strong retail HNI participation, this continues across the asset classes. Secondly, the shift is continuing for the household savings, and it is moving much towards equity as well. The Q4 numbers were largely decent despite absorbing the M2M losses, which were there largely in the AMC plays. Value buying seen in the recent correction for this capital market stocks which was there, and the institutional interest that still remains strong for the capital market theme stocks. Now, the BSE market share has seen gains in the FNO space. That's one of the important triggers. Apart from that, Anand Rathi Wealth, they have maintained their long-term growth rate. These are the numbers, operational updates, which I'm talking about for the fourth quarter. Angel One, the realizations were better. And if we move ahead and see the other important impact, that's Grow market share gains. And we just spoke about the brokerage is turning bullish. ICICI Pro AMC has better than market growth, and HDFC AMC's core business has also remained intact. So capital market theme, especially the wealth and AMCs, has done well, but the valuations is very much interesting. These are the 5-year peak numbers. They are still current valuations. If you look at it, they are still trading at a premium. That means there is a scope for a further re-rating as well. That's what the valuations are suggesting. But what lies ahead? That's the big question to be asked. First is, of course, the capital sector re-rating may continue, especially if you're a long-term investor. Keep an eye on this. And ancillaries such as Prudent, CAMS, KFintech may see buying interest, a follow-up buying interest in these counters as well. And of course, the most important, the NSE IPO. It's expected to come towards the end of the second half of this calendar year. So a lot of buzz is there, and it seems like there is more fizz left in the capital market theme.
All right, thanks Sharad for that. More fizz in the capital market. Now, the Indian exporters could get a big boost as a major US tariff refund window opens today. Now, the US has, remember, launched a portal to return up to $166 billion in duties that the Supreme Court ruled unconstitutional. Now, out of this $166 billion, India-linked refund may reach $10 to $12 billion. In fact, my colleague Mahima joins in with all the details on where we stand to benefit. Mahima.
Right, so basically, the US government has officially initiated the process of refund of import tariffs that, started on 20th of April. The refunds amounting to approximately $166 billion. This move comes after, of course, the US Supreme Court ruling that the deemed duties are unconstitutional. Over 56,000 registered importers will now begin filing their claims. US Customs and Border Protection to streamline the submission and processing of valid refund requests, and this will be done via online portal. Once the company submits its claim, the agency says that approved refunds will take 60 to 90 odd days to arrive. Now, even the Global Trade Research Initiative did put out saying that around 10 to 12 billion of refunds are linked to Indian origin goods. Refund claims to be filed only by US importers. Indian exporters have no direct access. Sectors that hit very badly because of tariffs coming in, like textiles, engineering goods, chemicals, likely to see maximum upside. Exporters may seek rebate sharing, price revisions and future order gains to capture benefit from this move coming in. So this is the overall view of what is the news flow update coming in with regards to where refund of US tariffs are concerned.
All right, thanks, Mahima, for that. Now, India is also stepping up its semiconductor ambitions, with the government set to roll out a larger reworked ISM 2.0 by the month of May. This is backed by a higher outlay and also broader ecosystem push from chip design, startups to equipment, materials and JVs. Now, the move signals a faster push towards 75% self-reliance by the year 2030. In fact, my colleague Rishabh joins in with all the details on the plans for semiconductor self-reliance. Rishabh.
Absolutely. What we have coming out of the meeting is, of course, the ISM 2.0, the much awaited second version, the second iteration of the Indian semiconductor mission. Of course, with a bigger outlay. This time, the first one was roughly about 76,000 crores. This one, the outlay is expected to be roughly 30% higher, anywhere between 1 and 1.2 lakh crore rupees. What we also have is, of course, confirmation that this is currently under interministerial discussions, including with the Finance Ministry. A panel of the Finance Ministry, the Expenditure Finance Committee, which essentially looks after government schemes worth more than 500 crore rupees. They are the ones who will be giving a nod to this. The hope is that this will be rolled out by May. Apart from that, the contours of the scheme include the fact that there is going to be a full ecosystem play. You'll have MSMEs, gas and specialty chemical makers, raw material makers that will stand to benefit from this. There will be specific outlays for these players as well. Apart from that, there's a renewed design focus in this. So there was DLI 1.0, the Design Linked Incentive Scheme, as part of ISM 1.0. The DLI 2.0 will be a part of ISM 2.0. This will essentially envision up to 50 deep tech chip design firms to come out of India. What DLI 2.0 will also entail is a mechanism to create joint ventures between Indian and foreign companies, with Indian companies holding a majority, so that the domestic IP creation happens. And that's what the government is essentially focused on, is that more and more IPs get created in India. What we're also looking at is, of course, this domestic capacity building is gaining more and more prominence as this West Asia conflict is dragging on. What we're also seeing is the fact that India aims to achieve up to 75% self-reliance in chip design as well as production by the end of this decade. So a very important move in that direction as well.
Indeed, a very important move. Thanks, Rishabh, for all the details. Now, amid the ongoing tensions in the Middle East, the government has said that about 14 Indian vessels are currently stuck in the Strait of Hormuz. But on a positive note, remember, Mukesh Mangal, the additional Secretary of Shipping Ministry, informed that a ship named Desh Garima, carrying about 97,000 million tons of crude oil, is expected to arrive in Mumbai tomorrow. Let's listen in.
So at present, total 14 vessels are there, 13 Indian flag vessel and 1 Indian owned vessel. Then again, there was a question about that this maritime, Bharat Maritime Insurance Pool, what kind of insurance it will cover it. So it will cover all kind of maritime insurance. And this will be basically used as a reinsurance, not directly insurance. So insurance is already provided by New India Assurance, Oriental Insurance, National Insurance. So many companies are there. The problem is that when, these companies have got their, some limited capacity, but when they wanted to reinsure, big insurance always are reinsured by big companies. So the problem lies there.
All right. Let's take it straight to an NDTV exclusive on an important development in the deal M&A space, and at least two independent sources with direct knowledge have shared with NDTV Profit that there is a deal brewing, a large one at that, in IFL Capital. Sources do indicate to NDTV Profit that Fairfax is looking to become the co-promoter and also majority stake owner of IFL Capital, and is in talks and advanced talks for that particular deal. Now remember that this particular transaction will be in two tranches. First tranche, remember, Fairfax owns close to about 30% stake already in IFL Capital. So in the first tranche, there could be a capital infusion of about 1,000 crore rupees in IFL Capital from Fairfax, in the form of preferential allotment of shares, which is by way of 10% additional stake. Now this, remember, will trigger an open offer because Fairfax already has around 30% stake in the company. And with this particular open offer, they could go above 51%, which is the controlling majority, and they could become the co-promoter of the company. Now to the important aspects in terms of the timeline of this transaction. Well, we gather from sources with direct knowledge that it's at an advanced stage, could be closed in about a couple of weeks. The second important aspect, the funds that will be infused by Fairfax in the first tranche of the deal, that is likely to be the growth capital for IFL Capital as it sets up its wealth as well as asset management business. So that's the growth capital that's coming in. Both the parties involved in this transaction did not comment on the development to our queries. And that particular stock really spurred in trade after we broke this deal development. All right, let's take it straight to an important corporate development and a top brass change when it comes to the international company. We are talking about Apple, and Tim Cook's 15-year stint at Apple is going to end soon. Apple has named the hardware chief, John Ternus, as its next CEO, and signaling also a major leadership transition in Apple. Now, Tim Cook will move into the roles of executive chairman. Under Cook, remember, market capitalization of the company surged from about $350 billion in 2000 to over $4 trillion. But as Ternus really steps in, the road ahead is far from easy for the new top brass, as the US President Donald Trump has also hailed the Tim Cook era at Apple. He said that he had really always been a big fan of Tim Cook, and that Cook will continue to do great work for Apple. So that's the new development, and the new CEO faces three big challenges, remember, that is accelerating Apple's AI capabilities to catch up with the global rivals, reducing the company's heavy dependence on the iPhone by building new growth engines for the company, and also, remember, navigating the mounting China risk that is coming in while diversifying its supply chain. So Apple to see a change of guard in September, and lots of new challenges and a new era will begin for this global giant. All right, India is about to take a big step too in understanding its people's earnings, and the Ministry of Statistics and Program Implementation, or MOSPI, is conducting the country's first ever national household income survey. Now, this survey will run from April 2026 to March of 2027. It will collect accurate information on household income from different sources to really help the government make better policies for all of us. Now, this survey is only for policy planning. It will not be used for income tax on any personal matters. As per the government, all information that you share will remain strictly confidential. So that's a big survey for the first time coming in India. All right, with that, completely out of time on this edition of Profit 360, but lots of news and views on the other side. Stay tuned to NDTV Profit, and thanks so much for tuning in.
From the factory floors of Guangdong to the policy corridors in Beijing. What is going to be China's next political economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
कुछ खास होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade. Spots the analysis to the show that the market watches. Analysis to the show that the market watches.
Presented by Canara Bank. Together we can.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And also let's talk about the overall companies which I'd like to get in KYC. It's a very interesting company which I have got for you, but I'm not going to give the name right now. I'm going to give you some hints. Try to guess it, and it has been a flavor when the IPO had come. It's a Delhi-based pre-engineered building related products company. Also, let's hold on and let's give you some more hints about this. It's the second largest PEB player in India. I'm sure a lot of you must have guessed by now, but I'll give you more hints also for those who can't guess. As of now, it was listed recently. You could say it's just been 1 year plus listing, but from the listing price, which is the IPO price which I have taken, the stock has moved more than 2 times from its IPO price. Very interesting company. It's a niche and also a market leader. But what is the company in focus which we will be talking about? And recently the company has been getting a lot of orders. The company in focus is Interarch Building Products. This is the company which we are talking about. During its IPO 1 year ago in 2024, there was a lot of noise about this sector and its growth profile, but definitely that noise has come down. So is there any value coming out from this? That's something to know about. But what are the key questions? Why are we getting this company? Of course, the company has been getting a lot of orders. That's the first reason. Recent order wins coming in. What are the key updates and the timeline from this? And of course, the order book status is something which we'll ask about the Interarch company. The PEB industry, what are the bottlenecks and how is the company mitigating this? Of course, now we are getting a little bit of discovery about the industry as well. It's one of the good times to study it as well. The industry tailwinds, the market share picture for the organized player, and where does Interarch Building Product stand? That's the key question to be asked. The timeline for the commissioning of the Gujarat and Andhra Pradesh facilities, will they be completed by the second quarter of FY27 or is there a delay? Also, current capacity utilization and the capex earmarked for the next 2 to 3 years. And remember, most of its sales is coming through the infra and the industrial segments. Of course, we'll ask the demand also and the incremental benefits to the margins, especially with a lot of automations at play. Does it actually convert into incremental help in the margins? That's something to know about. The important growth targets for FY27 and the expected industry growth rates. Remember, the company is under the silent period also because the Q4 numbers are not out yet. And any new product foray plans, if yes, in which areas, that is where we are looking at, where the growth momentum can be for the company. And to give us more details is company's MD Arvind Nanda. He will speak about the growth prospects of the company and the industry as a whole, and it will be very interesting to have this conversation for Interarch Building. But before that, let's understand what are the key details about the company which should be in your radar. And first and foremost, I would like to give you a perspective that it is a new, you could say a new area has come in, that is the pre-engineered body segment, and in that it's a market leader. The company does steel construction solutions in India as well, international expansions, we'll talk about it a bit later. Integrated facilities they have where there is installation, erection and the pre-engineered steel buildings. जो बने बनाए building होते हैं, if you call it in a very simple word, that is what we talk about it. It's the second largest integrated PV player, and that's almost 2 lakh plus MTPA is the capacity. Now the company is having 5 manufacturing facilities. It includes Uttarakhand, Andhra Pradesh and Tamil Nadu as well, and one facility is also there in the state of Gujarat. So this gives you a little bit of perspective, bird's eye view about the company. And interestingly, I feel the moat about the company is this. They have 155 qualified structural design engineers and detailers. That is where the moat generally comes in, and you get better clients and of course better margins in an industry which is highly unorganized. Now 3 orders recently they have got of 222 crores rupees in last 1 month, and last 1 week itself 2 orders had come, one of 80, one of 60 crores. The acquisition and registration for freehold industrial land was there in Gujarat for its expansion, so that was a recent news flow, and that's what also triggered my interest in the company. And company recently did 100 crore rupees QIP raise as well. Of course, it will be used for their expansion of the 2 facilities, which we'll discuss more. But this is the recent news flow for Interarch Building. But the total order book as on 31st January stands at roughly 1685 crore rupees. This is an important data, do note it down. Apart from this, let's also talk about how the order book breakup looks like. Industries are having roughly 83% of it, so the majority of this is in the industrial front, but the remaining 13% comes in from the logistics and only 4% comes in from the infra segment. Also, apart from this order booking, let's look at the key tie-ups and clients, and that is where the alpha might lie going ahead. It's not incrementally or quantified yet. The first one is the export presence in the strategic collaboration with Mold Tech. So that'll be pretty much interesting what this is all about, and the strategic partnership it was there with the Jindal Group for urban infra as well. Now of course the company would be focusing in the multi-story buildings and heavy building structures as well. So that is something which we will be watching out for. We have already understood the industrial part. Now maybe the residential part is something the company might be focusing in. Clients are really big, large group are the clients. That includes Reliance, it includes Asian Paints, Unilever and Grasim, to name a few. So definitely the company is in the right direction, at least in their industry, and they are one of the key players as well. But let's understand this market, how big this market is and what's the growth rate looking like. The PEB market, it's roughly around 33,000 to 34,000 crore estimated by the end of FY29. And if you look at the segments, how the performance has been, the CAGR growth is strong. Right now the company is focusing mainly on this segment, which is growing at 10 to 11%, but in the future of course infrastructure and building is also supposed to be showing a good double-digit strength when it comes to the overall market. So yes, there are sectoral tailwinds as well, but why is this company out of favor? It was once the darling in 2024, but now it seems FIs are trimming position. That's what at least I saw sequential basis. The second reason the stock is out of favor is valuations still remain expensive. Maybe the street is not giving that premium valuation which was being given during the IPO time. Street is concerned about the growth rate moderation, and why that can happen, that's also a reason I would like to point out, is it is still largely an unorganized sector, The organized sector, it's taking time, so it's going to take time until the company actually displays its supremacy, and the competition is coming in from the unorganized players as well. The question remains is, where is the moat? Is it the talent? Is it the automation, R&D? What is it that the moat is there for the company? And of course, the sectoral interest for this segment is out of favor as of now. And of course, in this recovery also, not much has been seen for the stock as well. But is there any alpha remaining here? That's the big question, and that's why we have got our KYC ratings to understand more in details about Interarch Building Products. Is the pain bottoming out? And because of that, we will be studying income statement, balance sheet, cash flow. This is the holy grail for financial ratios, and also the return ratios. Remember, it's a high return ratio business as well. Earlier in the IPO also this was told, and we see the numbers. The shareholding street trade, remember, the overall time is roughly, you could say, 12 to 16 months in our analysis. A company में सिर्फ एक साल से ज़्यादा का listing जो है हुआ नहीं है. Valuations will be very much interesting to have a comparison, but these are the small cap players, so that's caveat to remember. And the outlook, what the numbers they're expecting or what's happening, and largely it is qualitative, so we'll try to understand in case any quantitative outlook comes in from the management. But these are the important parameters where we will be judging the company. And the first parameter is the income statement, and the numbers we have taken from FY23 to FY25, the 3-year CAGR numbers, and look at the top line numbers. 20% 3-year CAGR coming in. EBITDA and PAT, that is where we are seeing alpha. So yeah, the company has done really well when it comes to PAT, EBITDA, and even revenue. Looking at the metrics for the third quarter, because the fourth quarter numbers are about to come in some weeks, the sequential numbers, there was a decent up move, but the year-on-year numbers have been strong for this. However, a little bit of margin pressure is definitely there. But remember, there will be some questions to be asked, especially on the financials front, but it is a silent period. So that's one perspective to look at. But company has maintained that 9.5 to 10% EBITDA consolidated margin. So that is doing well for the company as well. It will be pretty much interesting to understand what will be the next growth lever for the margins to go up. But net, it's a very strong setup for the income statement. So I'll give a thumbs up when it comes to the income statement. Let's look at the balance sheet. And one interesting thing about this balance sheet, the most important thing is company is debt free. And largely this is pretty much decent. There was a QIP fundraise also. That means in future, the next shareholding pattern update, we will see the promoter stake going down. But the most important thing is the borrowings front, and this is something which is a good unique selling point of the company. That is that the debt levels are zero, and the way they are going about it, it's very much important that their cash flow management would also be strong. And speaking of cash flow, they are having a 200 crore cash as for the end of FY25. So is there any acquisition at play, or is there any expansion at play? They'll be able to fund it. Internal accrual as well. So it's a balance sheet is also very strong. So I've given income statement and balance sheet, both of them a strong thumbs up. But let's see what's there for the cash flow segment. And largely we see the cash flow management is pretty strong in this kind of a business model, and what the company has. The operational cash flow to PAT ratio is pretty much decent at 50%. And even the net cash flows and the operating cash flows are decent as compared to the other years as well. Whether there is any lumpiness involved in this business, that is something which we'll try to understand when we decode this model. But now, as of now, it's a neutral rating when it comes to the cash flow segment. But let's go into the return ratios. And I had mentioned you earlier that the ROC numbers are very strong in this kind of a business model. 30% plus is something which you are looking out for, but a minor decline has been there. Now, will this decline be arrested going ahead, or will there be a little bit of more pressure? Remember, expansion is also going on, so you can expect ROC numbers slightly to be depressed at least for the next 6 months or 12 months as well. So net, still I would say for a business model like this and the ROCs which are coming to you, it is a neutral rating as well. But let's talk about shareholding, and a little bit of concern definitely comes. 59% was there in the month of September. But of course, because of the QIP, this number will be coming down. FIs, they increased the stake a little bit, then again they sold it off, and it's at 5%. But on the other hand, there is a way to look at it. That's the DIs. DIs, on the other hand, have been lapping up stake, though it's lesser from the 7% which was there. But nevertheless, there was a movement in this quarter. That is where the interest comes. Is the smart money coming back in Interarch? So because of that basis, I'll be giving this a neutral rating when it comes to the shareholding. But apart from shareholding, let's talk about street cred, how much money has been made for a long-term basis and also for the short-term basis, and see what has happened. Remember, 2024, the listing was there. So from the IPO, if you are holding the stock, congratulations, you have made money. The stock has given you more than double returns. But apart from that, last 1 year, it's been a decent 11% up move coming in. From 2025 highs, the stock is still down 24%. And the question remains is the valuations turning favorable, or it's better to stay away from this counter? And year-to-date basis, also the stock is down 14%. So for IPO investors, congratulations, aapne paisa banaya. But for the medium term and short term investors, it's still going to take some time. So net, it's a neutral rating when it comes to the street cred. Now I'll explain you the valuations, and very interesting companies have also come on my radar. Penar Industries is there, and there is EPAC Prefab also. Largely, Interarch is having valuations which is higher than its peers. But that doesn't mean is it very expensive. Remember, from its peak levels, there's always a correction of 20 to 30% in their premiums as well. But maybe it's a market leader, it's the second largest player in terms of capacity in India, the organized one I'm talking about. So that's why it is having a slight premium advantage, and it's justified. But is it justified for an investor to come in? We need to think. So it's a neutral rating when it comes to the peer comparison part. We spoke about 7 rating parameters. The last one I'm going to give you, this is the outlook coming in for the company as well. Now the Gujarat Andhra Pradesh facility, that's expected to be commercialized by the second quarter of FY27, and also the company is undertaking a lot of automation initiatives. In this industry, automation does help a lot, especially if you need to bump up your margins. The enhanced manufacturing presence in South, Eastern India and Western India, that is where the focus is. Remember, this is a Delhi-based company, so in the central areas and the north areas, they definitely have a good presence. Now, upgradation of their Kitcha, Pantnagar and Tamil Nadu manufacturing facilities, that's also pretty much important. Whether this is the capacity push or is there something else, that's something to be understood. And foraying into multi-story and heavy steel structures, this is a new area. So we need to understand how this business model works and what would be the incremental benefit in terms of the numbers. So let's give you the entire perspective. Outlook of course is a strong thumbs up, but एक revision हो जाए. KYC ratings में हमने क्या-क्या दिया है. So let's understand the income statement, balance sheet has been really strong for this company. Cash flows, it's pretty much decent. Return ratios, it is slightly dipping, but nevertheless still holding that 25% plus ROCE mark. Company is going through some spending, so ROCEs might be depressed in the coming time. Shareholding, of course, FIs are selling, DIs are buying. On the other hand, street cred for IPO investors, it's been a great returns, but after that, it has been a bit downhill. Valuations, it is slightly premium, but the street also needs to understand and give a valid valuation for this industry, and this seems to be out of favor. It was not out of favor in 2024, and outlook was good. So net, I have given on the higher side of the average earnings or the average ratings which I give. That's coming in at almost 5.5 out of 8 for Interarch Building. And also on the other side of the break, we'll be having a chat with Arvind Nanda. He's the managing director of Interarch Building, to understand about the overall industries and what he does. Of course, he's having a 30 years experience in this industry, and also he's a qualified CA for both UK and India as well. So a lot of conversations just after the break. Stay tuned.
From the factory floors of Guangdong to the policy corridors in Beijing. What is going to be China's next political economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And
Welcome back to KYC, and we are in talks with a very interesting company for KYC. Joining us is Arvind Nanda, Managing Director at Interarch Building Solutions. Good afternoon, Arvindji. It's always a pleasure to have you. And a lot of order flows has been announced by the company, almost 3 big orders coming in the last 1 month or so. Just wanted to understand what are these key orders all about, and by when can these realizations start coming in?
Thank you very much, Sharad. Well, these orders have come in recently. So our normal starting point for any new order is about 3 to 4 months from the date of the order. That's the time it takes to get the drawings approved, material ordered, and go into production so that the supply can start. But this is a part of a pipeline. So it's just a new order that we have booked. They will certainly get executed in the next 12 months. So they should be a part of the FY27 figures, not earlier. So there have been a lot of new inquiries, good inquiries. These are from auto sector, also from the news heavy structure sectors that we are talking about, which means a little on the high-rise building side. So these are multiple sided orders, and we are very happy to note that the serious large inquiries are still very much there in the market, and in fact the space is only picking up going forward.
Of course, Arvindji, we spoke about the order inquiry, and of course it seems from our conversation client confidence remains strong. But of course right now there is a silent period as well, so we won't be asking a lot about numbers, but we want to understand the strategy and the thought process behind running a business like yours. There are some bottlenecks in the industries also. How are these bottlenecks there in the industries, and how is the company mitigating these bottlenecks in your industry?
See, I have been personally involved with this industry for over 25 years now, 26, and in the architectural building products like metal roofing and ceiling for over 40 years now. So you can imagine from 1984 to 2026, there have been multiple issues. Whether it's a war, whether it's economic collapse, Indian economic collapse in the late 80s, foreign exchange crisis, no companies coming in, 2008 serious crisis lasted for many years. So we have gone through multiple crises. So we always look at Interarch as a company which has a long-term view. And in the long-term view, I have always believed, I'm not from a business family. Me and my partner both are from government servant families. My father was in the railways. We have no business background. So we have always tried to maintain that let's build a strong foundation. Let's give the customer the best product that we can give him available in the world, not only India, but available in the world. And let us deliver to him as we promise. And let us work with the top class companies in the world. So in India, when we work with companies, they are the top in the world. Because from there, we also learn a lot and we become good partners to them.
Exactly, Mr. Arvind. That's an interesting take on that. But I just was checking the numbers. 75% of the revenue in 9 months was coming from the industrial manufacturing segment. Any kind of a minor slowdown we have seen this, in the recent coming months? Of course, the current situation, there was an LPG shortage, workers going out, and also some issues in the NCR region. And of course, you have a good presence in North India. So is there any delay in inquiries coming from customers, or is there any impact in your industry or your company?
Well, I think the impact is more in sort of delivery, because a lot of workers get involved when the material goes to site for installation, for example. There we work with certified builders who have their own people and get their own resources. So there we are facing a challenge for last 2 or 3 months. First the election challenge, but that is again a part of the cycle in India. Some harvesting, wedding season, monsoon. These issues do come up. At a factory level, no, because factory workers are stationed at where we are. They don't really face any problems, and we look after their issues reasonably well. But yes, these issues have been there. I think manpower has become a major issue in the last couple of months. But we hope that after the Bengal elections, it will get resolved. LPG issues are getting resolved, and the contractors have also learned to take care of their people better. But from the inquiry side, no. See, the clients we deal with, they are very large, long-term companies. A company like Asian Paint or Grasim or Tata Micron or Excite Battery. These guys are very long-term. They don't go by the seasonal up and down or even an annual up and down in the business. It does affect the sentiment, no doubt about it.
Right.
We have not seen any downturn in inquiries.
Right, Arvindji, that's a very interesting point, and you have clarified it also for the industry as well as for your company as well. And of course, there is no impact coming in on the company or the factory level, and at least no impact on the inquiries as well. I just want to understand a little bit about your tie-ups. There are 2 tie-ups which was very much interesting, which is already there in the public domain. One is with JSW Group and another is the Moltech. So what are the actual benefits like? And of course, you cannot give us any timelines for it because it's not a publicly given information. But what kind of benefits we can understand? You could just give us a qualitative angle to it.
Okay. The tie-up is not with JSW, is with JSPL. JSPL has a fabrication company where they manufacture structure for themselves primarily and also for others. So we had a tie-up with them because earlier, till our own heavy structure plant comes into play in June, July this year, the heavier structure items were very unproductive for us to make. So we had a tie-up with them because there were orders that we had in the last 2 years where we needed those so-called heavy structure items. So JSPL was our partner for supplying us that on a periodic basis when we needed them. That is still there. But I think once we have our own plant running in June, July, that of course will sort of die a natural death. But it is always there that we can go back to them if we have additional quantities to buy. Moltech is another one. Moltech is a very advanced technical engineering detailing company which has its base all in America and Canada and Europe. They don't do any work in India. So the tie-up with them was primarily because they have a lot of clients who work out of US and Europe, and they want pre-engineered buildings, drawing and engineering to be done.
Right.
So
right. That's a pretty interesting take. Arvindji, another question I have is, you spoke about a lot of automations which are happening in the company. And a lot of investors ask, what's the moat of the company? Of course, you work with great people. You have been in the industry for 3 decades. Just want to understand what is this angle of automations, and can this be quantified as a benefit for the company? I don't want the number, but will this be margin accretive and why?
See, the quality is always a very important issue. Normally, when we automate, we are doing it to improve our quality of the product. And quality of the product will always remain a moat. So that has been from the beginning that whatever is the best available in the world, we should be giving our client, whether it's from technology point of view, whether it's the product point of view, whether it's even the painting, the primer, welding. So technology upgradation is done more to keep up with what is the best in the world so that we can offer that to our client. Of course, it makes for faster production. It improves the productivity of our existing workers. Therefore, we can deliver better and faster to our clients and improve the total production out of a same plant. So that is the reason why we automate. And there are a lot of areas that one can automate in steel fabrication. And we are constantly working on it, but keeping a balance that automation should not displace a lot of our workers. We keep expanding so we can use the workers wherever we go and in expansion. And number 2, it should not increase the cost so much that we can offer a European standard product.
Right,
which
Arvindji.
could be, say,
right. I just have one last question for you. Is there any new product forays or product lines which are looking good for that the company will be starting or entering into? If you could just give us a glimpse about it.
Well, heavy structure is a very, very important area for us because that puts us into a different category where we can do data centers, high-rise buildings, large semiconductor plants, steel plants, fertilizer plants, power stations. So it puts us in a completely different aspect of the steel buildings. Second is exports. We are trying to build up large partnerships with US, Canada, Africa, etc. to supply buildings to them on a supply basis, engineer supply. So we don't get involved in erection. But that is the two new streams that we are looking at, and we are building up capacities for that very fast.
Right. That's a pretty much interesting take, Arvindji, for the company as well. And of course, you clarified that the inquiries remain strong for the company and the industry tailwinds continue. Thanks a lot. It's always a pleasure to have you and a market leader in your segment to talk about the industry and the company. So that's the management we are talking about of Interarch Building Solutions, and they have clearly maintained that the large inquiries are still intact despite a little bit of minor tailwinds happening in the India's industrial front. To get all these important companies in KYC and take out the real alpha, you'll always be joined by me on the weekdays at 11:30 to get in new news for these companies in KYC. So stay tuned to NDTV Profit.
From the factory floors of Guangdong to the policy corridors in Beijing. What is going to be China's next political economic strategy and its big ramification for New Delhi? We decode all that for you in this very special China edition of the India Business Report with Gauri Dwivedi.
कुछ खास होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Depending on how large your portfolio is, the month of March would have hurt a little bit or a lot. Why is it that things feel entirely different when you're managing a portfolio that has reached that 1 crore mark? And should your strategy change when you do hit that milestone? And why is it called the first major threshold for you to reach, after which generally your wealth creation rises, or the pace of wealth creation rises exponentially? Joining me to talk about it is Vineet Iyer, who is Principal Officer and Managing Director of Prodino Wealth. Thanks so much, Vineet, for taking the time. Let me ask you that,
Thanks, Alex.
Which is, why is that 1 crore number so significant? And it's obviously changed over the last 25 years, but everybody still talks about 1 crore.
Yeah. So, see, if you look at the mindset about 30 years ago, a Lakpati term was considered to be the thing, right? Now, of course, with inflation over a period of time, Lakpati, technically everyone is kind of a Lakpati. Any middle income family is a Lakpati. So the next natural milestone is to look at the next level, that is Crorepati. And that's where that 1 crore is very important milestone for anyone's life. And that's when actually a person starts feeling more comforting in terms of taking little bold decisions in their life. And that's when you will actually see things happening much faster.
But can you lay that out? Because I've seen some of these descriptions and they sound almost too good to be true, but it's simple compounding ultimately, right? 10% on a base of 10 lakh is 1 lakh, but 10% on a base of 1 crore is obviously 10 times that. And in a good year, 10% is easy to get. The problem is that we haven't had a good year in 2 years. And so therefore, a lot of people might have forgotten about that experience. But take us through the journey, so to speak.
Sure. So before I get there, let me explain to you in terms of how this 10 lakh is different from the 1 crore. When a person is accumulating the first 10 lakhs, it's more of a growth and accumulation phase. The person is willing to take a little more risk. But the more the portfolio goes towards the 1 crore mark, a person wants to protect as well as grow and also ensure there is some decent amount of growth, not very aggressive, because it has taken so many years for that portfolio to grow in. And that's where the consciousness comes in. Second, if you look at the compounding concept, so there is a rule called as 8-4-3. What that basically means is if you get a 15% return on a capital, if let's say you're investing on a monthly basis, it roughly takes about 8 years for an amount of 50,000 rupees a monthly SIP to grow to a level of 1 crore. But the next 1 crore will happen in the next 4 years. And the next 1 crore, that is the journey from 2 crore to 3 crore, will happen in the next 3 years. So what took 8 years for the first 1 crore to be achieved, it has taken just 4 more years for the next 1 crore to come in and just 3 more years for the next 1 crore to come in. The other thing, what happens is when the portfolio base starts growing up, for example, today, if you have a 10 lakh rupees of base, you're getting a 10% return, like you rightly said, or let's say 12% return, you're getting a 1.2 lakh rupees of annual increment on the base. But the same 12 lakh rupees or for the same 12% on a base of 1 crore, it actually converts into 12 lakh rupees. So it could be possible at some point in time, and I call this as an invisible SIP, where if a person has a 1 crore portfolio, even if he stops contributing and if he's getting, say, an average 12%, every month the portfolio will grow technically at a 1 lakh rupees of incremental listing. So that SIP, even if you're not actively contributing, the portfolio is actually having the benefit of that growth. So that's the benefit that one can get if they get to that level.
The danger, Vineet, of these linear progressions as we draw them out is to think about the investments that we make as guaranteed returns, right? So we've talked about how 12% translates over a period of time. But the fact is that the last 2 years have not given us that. So, but having said that, it could well be that the next 2 years make up for that. So how do you explain that concept? Which is you could actually spend more than 4 years in some instances achieving that second crore, or in some cases it could happen in 2 or 3 years, whereas the next crore could take longer. It's not a guarantee, these thresholds that you've spoken about.
Absolutely. It is not guaranteed. And the longer you spend, the more probability of this happening increases. And what you need to look at is that the volatility in the returns, basically, if I have to speak about from the period of September 2024 till April of 2026, there has been a massive volatility in the market where things have gone up, then it has gone down, then it has gone up and again came down. And the range, if I look at the volatility, it's in the range of about 18 to 20%. But if you look at from point to point returns from the April of 2025 till April of 2026, anyone who has gone through the SIP route has made a double-digit return. At least we can see that from the portfolios that we are managing for our clients. So if you're looking at a lump sum, maybe you may not be able to see that kind of a growth. But if you're looking at an SIP route over a 5 to 6 years period and then looking at a 12% average return, I don't think so. It is very not gettable kind of a situation. Of course, the linearness will not be there, but as long as you are maintaining that consistency, as long as your goals are at least 5 to 7 years away, and you can ride in this volatility through the SIP way, I don't think so these challenges would be still there. What we've also looked at is anyone who has invested around the 2022 February mark, when the first global conflict happened. Even today, with these current levels of market, those SIPs are actually giving about 15 to 16% kind of a return. So which means that anything which is more than 3 to 4 years old investment, with the market volatility also, it has still been able to give that kind of a return. So it's just about holding on to those investments in line with the goal horizon, and then I think it's gettable.
Yeah, and just a couple of weeks or less than a month can make all of the difference. If you were looking at your portfolio at the end of March, and you're looking at it as we're speaking, which is on the 21st of April, then the experience will be entirely different, because the benchmark level itself, you've seen a 10% move up from the end of March in the Nifty 50, and more so for the small cap and the mid cap index. But having said that, what is the advice that you're giving to people? Because you're probably getting some comments at the very least, Vineet, from people who are saying, look, my portfolio has done nothing over the last 2 years. How am I supposed to respond? What is the strategy that I need to utilize now?
Yeah. See, over a 10-year period, if you see a flat 2 years, it's actually, over a longer period of time, it's mathematically irrelevant, right? So these periods are actually meant for good accumulation at a lower price. And these periods can also give you that spring effect where you're accumulating things, and when things break out, the portfolio that you've accumulated during these tough periods are actually going to give you outsized returns. So the thing that I recommend to clients is that if your goal is at least 10 years away, you need not worry about these flattish periods, because these will keep on coming in every now and then. What you need to be focused on is when do you need the money, and when the money is needed under 5 years, you start moving away from equities and get into safer assets, maybe in the form of hybrid or conservative. And that actually helps you much better rather than just looking at the portfolio value day in and day out. Rather than that, focus on the goal. And I think a person is sorted. The problem arises when there is no particular goal assigned to the investments, and the person really did not know that they should be holding this for 1 year, 2 year, 3 year, because they do not have anything planned for that particular investment. That's where that anxiety kicks in. But if you know that you are going through a plan-based approach, then these kind of uncertainties will not unravel you. And this is what we've experienced in our set of clients.
Okay. Let me ask you about dry powder and the concept of using cash in your asset allocation. Because when it comes to markets falling, COVID-19 has caused a lot of people to react in a very binary fashion. If they have the cash, they will deploy it because they've gotten used to the idea of buy the dip. If they don't have the cash, they've been conditioned to sit tight. Now, why is it not always a good idea to go whole hog, and is it a good idea to keep powder dry? What is your definition of dry powder?
See, dry powder basically means you should have some liquidity in hand. So
that is fine. I'm saying that the basic definition is clear, but I'm saying how do you define dry powder as a percentage of your portfolio?
See, it's a tricky situation actually. If let's say you are anticipating a market correction and then you're sitting on a high amount of cash, that could be a cash drag on the returns. At the same time, if you're low on cash and if something like this opportunity that we saw in the month of March comes in, then you feel that you do not have any money to deploy and buy the dip. So it's a tricky situation. But having said that, anything between 10 to 20% is something that if you can actually maintain in cash, which can actually come in handy in such situations. And also that liquidity can take care of any other things. For example, if there is any emergency, rather than dipping in the portfolio, you can use this dry powder or the cash that you're sitting on for taking care of those things.
Hold on, Vineet, what you're suggesting is you're actually suggesting that you use your emergency fund as your dry powder. Is that what you're saying?
Not really, but sometimes what could happen is, for example, you have an emergency fund that's not sufficient, something big comes up and you are required to dip in the portfolio. And if you're sitting on this dry powder, maybe you can dip in to take care of that situation rather than withdrawing from the portfolio, which is not doing comparatively well.
Fair. So let me put this into a hypothetical situation here, right? So since we've been talking about a 1 crore portfolio, this is the dream for a lot of people. Let's assume that you have that 1 crore portfolio and you've got a large amount of money that you've invested in equity. You have a certain amount of money that you want to keep aside for opportunities that might arise. You want to set aside a certain amount of money for your emergencies. Let's talk about that being 7 or 8 lakh rupees out of the total that is only reserved for emergency. You don't touch that for any opportunity, no matter what comes. So you're left with you're left with approximately 92 lakhs to apportion, right? How much of that 92 lakhs in this kind of a scenario would you put, and would you put it in something like an arbitrage fund or a liquid fund so that it is easily accessible to you?
Sure. So out of the 92 lakh, not more than 10% for a retail investor, because the problem is if you sit on cash, you also need to be aware that when you should be investing, like there has to be a rule. It cannot be at a certain market level, because every time you look at the markets dipping, you may want to wait for some more time to see if the market dips and makes another level for you to enter. And many of the retail investors fail in this approach. So if they are having about 10%, they can keep a rule where for every few percentage points, they can look at deploying 2 to 5% of whatever money that they have. So typically what we do in our case is we have a 10% trigger for the market to fall. And in that case, if there is a dry powder, we try to allocate 20% of that money into the equities. There is also something called as a weekly trigger, where if the Nifty is falling below 3% in that particular week, then we may be a little more aggressive in terms of deploying. Now, these kind of strategies, they look good on paper, but implementing them in practice becomes difficult in a DIY approach at a retail investor level. And at the same time, if the retail investor goes, say, up to 20% and sits on cash, which the retail investor may not find an opportunity to completely deploy that. He may be sitting on the fence. So that becomes counterproductive. And like I said, it becomes a cash drag on the returns.
Yeah, okay. You can also look at fixed income as a percentage of the total and utilize some opportunities to book out of fixed income and move into equity. But having said that,
asset allocation.
Yeah, absolutely. Asset allocation. Now, to that end, gold and silver is also part of the whole, but it fell off a cliff for good reason, because it went up by 70-80%, and then after that it fell quite dramatically, right? And so the question that I have, we've spoken about incremental investment at this stage, and you're talking about doing that for equity, but would you suggest doing that for gold and silver? Or should you do that through an ETF route, or should you do that through multi-asset funds, which allow you to have access to gold and silver, but also equity and also fixed income?
Yeah. See, the fundamental problem that I see in gold, or any commodity for that matter, is that, especially gold and silver, if I have to put that way, is that it's more perception driven, right? I cannot today tell for sure that, okay, the value of gold or silver is on the higher side or it's at a cheaper side. But I can definitely say that by looking at equities, and that's the reason getting a position in gold becomes difficult. But if, let's say, as part of your overall long-term asset allocation, if you want to deploy 5 to 10% of the overall portfolio into gold or silver, then maybe ETF is a better way to do that, because in that case, you have the control over what percentage of money you should keep at any point in time. Suppose you decide 5%. So you can control that by the way of direct investments in ETF that you want to maintain at 5% at all points in time in allocation to gold. So between gold and silver, I generally suggest that silver is something that I try to be away because of the high volatile nature of the asset class. But if someone is keen on investing into silver, sort of every 100 rupees that they want to invest in commodities, maybe 70 goes into gold and the remaining 30 can be invested into silver. The challenge with multi-asset fund is that, and I was studying some of the top large AUM category funds in the multi-asset category. And there I have seen that majority of the multi-asset funds are not having more than 10% allocation in combination of gold and silver. So if you're putting 100 rupees in a multi-asset fund, you're barely getting about less than 10% allocation to this. This may not be a very meaningful allocation in your overall portfolio if multi-asset allocation is one of the category of funds that you're investing in the overall portfolio. So you have to be conscious about that fact as well.
Yeah, there are a few that do have though, and if I remember correctly, there is White Oak Capital, there is ICICI Prudential that has not just gold, it has multiple commodities that they play through derivatives as well, right?
True. But ICICI being the largest in its category, if you look at the gold allocation, it's under 10%. Yeah. And if you look at the silver allocation, it is 0.
Sure.
If you look at White Oak, they are still maintaining about more than 20% allocation between gold and silver. But that's an exception. Out of the top 5 funds, White Oak becomes an exception. The other funds, the likes of ICICI, SBI, all of them are maintaining gold and silver allocation around the 10% mark.
Yeah, let's also give it to them, right? Because they probably see opportunities in equity, and ultimately a multi-asset fund is supposed to shift asset allocation based on where they see the opportunity. So if they see equity as a good opportunity to deploy, they will be going overweight on that. But the point is made. And I think we've covered quite a bit of ground to say that the best way to deal with these kind of situations where there is a drawdown is to keep going, and you will catch up eventually, particularly in a 8 to 10 year time frame. Thanks so much, Vineet, for taking the time.
Thank you so much.
Shifting gears and talking about your credit card, actually not just your credit card, your loans in general. And what are the do's and don'ts? Because I've heard some horror stories and I want to ensure that you don't experience anything close to that. It's easier than you think to slip into a debt spiral. Dilshad Bilimoria, Managing Director and Chief Financial Planner of Dilshad Consultants, joining me right now. Dilshad, thanks so much for taking the time. We've been having this conversation more often in the recent past because of the kind of propensity people have to swipe their credit card and things get out of hand. But what are the biggest mistakes that you see people making, particularly young people, in the way that they're spending money and the way that they're borrowing money in order to spend?
Yeah. So, Alex, what I've noticed is people go with loans as per their eligibility rather than their affordability. There's a big difference in that, right? So I am eligible for the loan because the bank has suggested it, so I will go for it. But we've got several people who have come to us where their EMIs and expenses exceed their income. Now, how are we to help them if there is no magic potion to this, right? So it's ideally that and this we've seen across the spectrum between the ages of 25 right up to 40, where people say, I have XYZ loans, home loan, credit card loan, personal loan, car loan, and vacation loan. How best can I, prepay this, and how can I get my cash flows in order? So it is, a very sad situation when people don't realize that sometimes they misuse the loan that is eligible to them.
All right. Okay. So that's the biggest mistake that you see being made. There are instances of a rapid increase in the outstanding, which is how much money that somebody owes, right? And this usually takes place because of a credit card. There is this minimum due concept that allows you to pay a small amount of money and roll over your credit, but it's very dangerous, is it not?
Yes, absolutely. So what people don't realize, and this is what the banks and credit card companies mention, is that pay a minimum due balance. Now, when you say that, say my outstanding credit card bill is 1 lakh, and I need to pay only say 3,000 for this month. The remaining amount is spread across 3 years and interest is compounded monthly on that. Now, if that weren't enough, any new spends are added to this as an extra, so I'm paying the interest and EMI on that new spend and on the complete outstanding balance. Now, this is very, very dangerous, folks. It's like a triple whammy and it's a monster. So never, ever pay, the minimum due balance, which banks actually would prefer for you to do, where they would actually make money and interest out of it, and it would help their balance sheet rather than your balance sheet.
Yeah, that's a very important point. So just to drive home that point, Dilshad, in the explanation that you gave, when you're talking about 1 lakh of rupees of a monthly bill, for a credit card, if the minimum due is some 3,000 rupees and you do that, and then in the next cycle you've spent even 10,000 rupees, ultimately it'll be 97,000 rupees plus the interest charged for that month, plus the 10,000 rupees that you will have to pay at the end of the next cycle. And then the minimum due would go up to maybe 4,000 or 5,000 rupees. And then that keeps compounding over a period of time. It compounds very, very quickly. Is it okay if you've allowed your credit card situation to go a little bit out of control to use one of multiple options? And what is the priority of those options? So one, break in investment to pay off this. Two, take a personal loan because it's going to be significantly cheaper than your credit card loan. And three, go and ask for friends or family to help.
Okay, so that's a very interesting question, Alex. So here you would compare typically what the market is giving you as an investment rate of return vis-a-vis what the personal loan rate of interest is vis-a-vis what the credit card rate of interest. So for example, credit cards charge between 36 to 45% per year, right? About 3 to 4% a month. Personal loans are in the range of about 12 to 14% per year. And you have, investments today which are giving you in the range of about 8 to 14% per year. Now, depending on the the current investment cycle and the market condition, we have advised clients to take an informed decision. If the markets are not doing well, then we would rather say that use the market or investment returns that you've accumulated to prepay the loan. But if on the other hand, what you're earning in the market is giving you above the rate of interest on your loan, which is say above 10 or 12% or 14%, why would you use the market investment return to prepay the loan? Ideally, you should be holding the investments and, like you said, beg or borrow from your family and friends and use that to kind of, prepay. And before you reach that stage, I think it's important to have a debt to income ratio of less than 30%, Alex. There are various prepayment models also, which I can touch upon, but ideally make sure that you do not exceed.
So yeah. But Dilshad, the problem is that a lot of people do get into home loans and other such, which are very chunky. And initially it is upwards of 40, 45, even 50% of your take home, your EMI. So talk about the various ways very quickly where you can have a prepayment cycle and reduce the debt burden.
Yeah. So, like you said, one of the prepayments is comparing it with, investment returns in the market, etc. But the two broad prepayment options is the snowball method and the avalanche method. In the snowball method, typically you make yourself feel better by trying to, prepay the smallest loan first and then go to the bigger loan. So say you have a personal loan worth 10,000 and you have, say, a credit card loan worth 1 lakh. You would ideally start clearing out first your personal loan and then move to your credit card loan, your car loan, etc. The avalanche method is typically taking into consideration where the rate of interest is the highest. So as we all know, the credit card loan rates are the highest, and ideally you don't want to pay interest on something which is a bad asset, or a debt. And so there are good and bad debts as well. So typically you would not want to, you would definitely want to prepay and do the best to kind of close the credit card first, followed by the personal loan, followed by the car loan, and the last would be the home loan because that's a good asset or a good debt.
Got it. But is it possible and this is the very last question, is it at all possible that a good debt becomes a bad debt? Because I've heard this a lot. You need to differentiate between good debt and bad debt, and credit card is bad debt, but a home loan is good debt. So is it possible for a home loan to go bad?
Yes, it is possible for a home loan to go bad if it exceeds the debt to income ratio. Right? So ideally, you need to ensure that your EMIs do not exceed 30 to 32% of your gross income. And if it does, then you're earning money to pay off debts, and you are not having suitable cash flows. You're not doing budgeting properly. So you'll need to revisit your expenses. You need to kind of budget your expenses better so that you try and ensure that it comes within that percentage that we are working towards.
Okay. And you've described these two broad outlines for a repayment and prepayment, avalanche and snowball. Which is the better approach in your opinion?
Definitely the avalanche, because ideally you would not be wanting to pay interest on, high interest rates, especially when it's a bad debt, right? So the avalanche is a better way of kind of prepaying the loans.
As difficult as that might seem, and sometimes you might want to replace your high cost debt with lower cost debt, relatively speaking, which is what we spoke about when we spoke about personal loans. Dilshad, thanks so much for taking the time. Important subject that we've spoken about today.
Sure. Thank you so much. Thanks, Alex. Thanks as well.
Well, that brings us to the end of this edition of Your Money Matters. If you find yourself in a situation where you need assistance, then don't hesitate to write to us in the comment section and we'll try and put you in touch with somebody that can help. Do stay tuned. This is NDTV Profit.
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. On editors.
Ishad Bansal, co-founder and CFO of Grow, want to try and understand about the quarter ahead and the outlook. So, Ishad, thanks so much for joining in. I want to start off after the fabulous numbers that you've given. How did the product mix evolution, because derivatives are so high for you, contribute to the margin expansion despite higher volatility?
So if you look at the growth rate from a YOY basis, I think last year was relatively a one-off. Because of the regulations, the quarter was slightly lower. If you look at on a Q-on-Q basis also, the company has grown well, where actually the volatility that you talked about actually helped. So which has increased the equity derivatives contribution as well, because the number of orders went up because of volatility. A lot more people started trading on derivatives as well. But that number is still small. So I think earlier this number was more closer to 14 lakh. This time it is around 17 lakh. And order per user also went up because of volatility. People across different asset classes did more kind of in and out from both cash and equities, as well as what happened on the commodity side, which has something new that we launched last quarter, and it has scaled up and the growth rate of commodity is even higher. And on YOY basis, if you look at the MTF is another business that we have launched almost 1.5 years back, and it has started contributing now 7 to 8% of our revenue, which used to be like 2% last year. So all the new products have significantly improved in terms of margin, in terms of contribution, and our cost structures are relatively fixed in nature. So whenever the revenue increases significantly, the operating leverage shows up across the board, including EBITDA as well as on the PAT side. So the growth rate actually helped us to improve margins.
The MTF book grew about 22% quarter on quarter, quite a bit. Even the commodity derivatives active users hit a fairly decent high for you. What drove this outperformance in a period of an index declining about 15-16%? And how does FY27 therefore look like?
So the base effect is significantly large on MTF side. So if you look at our market share was at like 2.7% today. This used to be 1 point something percent in the last quarter, and 1 year back it was less than 1%. If you look at the fair share that we look at, which is the equity ADTO levels, where we are currently like mid double digits, around 15%, I think that is where in longer run it will reach to. So the penetration across our customer base of MTF is increasing, and it is not really correlated with market yet. I think once we reach to the fair share, probably it will be more correlated to the markets.
Okay, the total customer assets declined quarter on quarter due to MTM losses, right? Despite the large net inflows that came in from the domestic investor. Now, are you in a position to hypothesize how sustainable these inflows from new existing users would be, and what impact would geopolitical tensions have had on Q4 activity versus, the longer term trends?
So I think still we are seeing consistency in the long-term inflows. I think the choice of the asset class keeps on changing. So last quarter, for example, ETF was a big asset class. This time it was slightly lower. And we expect that to happen in the future as well. Whichever asset class performs better, customer gets crowded towards that asset class. But if you look at the inflows across multiple quarters, so we have given that data in our newsletter as well. So the inflows has been relatively consistent. So somewhere around 25,000 crores is what is getting inflowed almost every quarter. And we expect that to kind of grow when the markets are doing well, and will be stable at these kind of numbers when markets are not so great. So M2M will be again very different depending on how the market performs and what happens on the geopolitical side. But inflows are very, very strong still. SIPs is a very large component of these inflows. We are one of the largest players in SIPs as well. So they contribute somewhere around 40 to 45% of inflows for us.
Ishan, the cost to operate rose about 66% due to risk costs, I think CSR, M&A expenses. But the platform penetration remained single digit. The potential is probably 3-4x, right? So for FY27, what's your guidance? Active users growth, maybe marketing trends, margins, everything.
So the way to look at it is on a quarterly basis, we are acquiring somewhere around 1.2, 1.3 million customers. I think we believe that that number will continue. And if you look at the churn rate is also on a very low side. So that helps us keeps on adding customer on an active customers basis. And I think this trend of adding like net of roughly around 3 million odd customers will continue in the next year as well. If the markets perform better, these gross additions of 1.2, 1.3 million, we have seen going to like 2 million as well on a quarterly basis, which are obviously exceptional quarters. But if something like that happens, it can go even better. The second part is on the diversification across asset classes. Customers on their sides are definitely doing it, but our revenue model across different asset classes are slightly different. So what is happening is, if you look at mutual fund are not generating any revenue for us since last 10 years, but with Prime, with Wealth, with W coming in, all of these contribute to the revenue generation coming from the mutual fund piece as well. So Fisdom acquisition, there is a regular book of around 7 to 8,000 crores. Then Prime, effectively our own customers moving to regular mutual fund will also help. And this revenue stream is a lot more consistent, a lot more stable. And we expect its contribution over, let's say, not necessarily 1 year, but in next 3 to 4 years, become a double digit or bigger than double digit kind of a number for us. And that will create a stability for longer run for us. From a margin perspective, I think the third part was, I think margin has been expanding almost every quarter for us. And the reason is, again, the growth of the revenue is faster than the growth of our cost structures. And cost structures will remain across three major streams. One is cost to serve, which is tech-related cost, where also we are seeing optimizations. And then cost to grow has become relatively fixed. So we have seen that we have spent around 450 to 500 crores in both last year and this year. And we expect the similar number to be there in the next year as well. And on the cost to operate, think of this more like a people cost, which increases because there are appraisals or you do hiring. And that typically increase between 15 to 20% on year basis. Obviously, there is one-offs included in that because of the risk piece also that you talked about. And also the acquisition that we did on the Fisdom side. Last 2 quarters had a significantly higher cost to operate because the company, the whole cost came into our cost to operate kind of a segment. But on a platform side, cost to operate is not growing as much as at a consolidated level it is growing.
Have you kind of thought of the AI impact on your business, employment growth, etc.? Any thoughts there?
So it's difficult to predict as of now, but in general, we are very like efficiency first in some ways. So we've been growing our user base, our revenue, our products without increasing our headcount significantly on the platform side. And I think that trend will continue. We might not add too many people on the platform side in the next year as well. But still there will be, again, appraisal related costs that will increase the employee cost. But beyond that, we don't think there will be a significant addition in people.
Got it. Ishan, one last question. I mean, there has been very strong profit generation. You're probably deploying into various pieces, no dividends, I presume, because of the high growth phase. Any equity or debt fundraisers in FY27? Also, how will you prioritize cash allocation across broking scale up, consumer credit, inorganic opportunities, what have you?
So, barring the inorganic opportunities, if you look at it, we will generate cash, which will be significant in the next year as well. Large part of that, you rightly said, will get deployed in MTF and LAS kind of opportunities. Hence, we might not need any significant debt or equity raise in FY27 for sure. But assuming that some opportunity comes on the inorganic side, that might require a cash infusion. But beyond that, I don't foresee any kind of fundraise requirement in the coming year.
All right, Ishan, we'll leave it at that. Thank you so much for taking the time out and being with us.
कुछ बड़ा होने वाला है।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
It is time now to speak to Dinshaw Irani, Chief Executive Officer of HCL Capital. Dinshaw joining in. We had a conversation this morning, Dinshaw, and somebody...
It's a standoff which will be resolved pretty shortly. I mean, obviously, you would have realized this because US, despite certain things coming out of Iran saying that we're not interested in this deal and stuff like that, they're still sending a team across to Pakistan for negotiation. So it's obvious that it's going to happen in a couple of days, if not probably weeks, I hope. It doesn't happen in a couple of weeks. It happens in a couple of days because that's what we're hoping for. And frankly, I mean, it looks as if everything is at a standstill right now, but hope is that something will give at some point in time. I think that's what the market is building in today. And hopefully that should be the way forward, I hope.
Dinshaw, the recovery that we've seen in April and we're continuing to see is quite robust, particularly because, as some people had pointed out, during this conflict, we were beaten down worse than even Dubai was. And so to that extent, I think this is par for the course. But having said that, do you think that there is a possibility that Q4 is not going to give you a complete picture of how things stand? Q1 is where you will see some damage. And so if we continue down this path, you could see surprises that will have to eventually be priced in Q1.
So basically, I mean, by the way, a bit more lighter term, I used to always say that India is the only country, or our markets are the only place which is taking this conflict pretty seriously. Both the guys who were before at war were giving out with these, crazy tweets on each other. But anyway, having said that, I think Q1 is going to be the worst quarter. Q4 will still be manageable because it's only 1 month of conflict. And frankly, I mean, you haven't seen any cost escalations being passed on. Also, there was inventory lying with most of the manufacturers. So they had this low priced inventory which they could have used as such. But going into Q1, I think this is the quarter which one has to look out for, because obviously the high cost inventory is going to hit them this particular quarter. And obviously, I mean, looking at the way the manufacturers have been, they have not been passing it on to the consumers today. So the bulk of the hit will be absorbed by manufacturers. And it's obvious, you can see it in the WPI and CPI, that there are two different tangents going there. WPI is going up, CPI is more or less flattish. So basically the consumer has not got the hit. Our feel is that Q1 will be the worst quarter if the conflict gets over pretty soon, right? Having said that, I think India is bound to now import crude at $20-25 extra for an average of the year as such. I mean, I don't think the crude is going to come down below $80 in a rush going forward, even if the conflict is over. You saw that when there was a news that the conflict's over, I think the crude came down to as low as 84, 85, and then reacted up back again. So my feel is that we'll have to live with this highly priced crude for the year, I suppose. But that again is like around $30 billion for the full year of extra money which goes out, which I think can be absorbed by the consumer to an extent. Obviously, the government has to do its bit. So it's going to be a very trying year. Having said that, I think the demand growth has not been shattered. I mean, you saw that in the month of March. The numbers, the retail numbers which came out in the auto space were very exciting numbers. I'm not talking about dispatches, I'm talking about the retail numbers, which is through the WAN data as such. April doesn't seem to be any different. So I think the consumer has taken it in his stride, obviously because he's not felt the price hikes. But one has to wait and see.
That's actually the key point, isn't it? We haven't in India on ground or in any real way visibly still seen the pain of what's happening geopolitically? I mean, we're reading about it, we're seeing it, but apart from exporters, etc., no one cohort has felt it. Having said that, Dinshaw, you talked about auto consumer trends. Are you feeling enthusiastic after seeing the IT and banking results that have come so far?
So basically on the IT front, I'm not feeling enthusiastic at all. We continue to remain negative, and our stance has been pretty clear. We've been negative from Feb of last year itself. We believe AI is going to be a big reset for the industry. So one has to wait and watch how it works out. You saw the TCS numbers. They were okayish, but going forward, the trends, I mean, the lookout was not that great. I think the clearer picture will come out with the Infosys numbers, which are on 22nd, I believe. So let's see how that goes as such. I think this will be clearer there. Banks was pretty good. ICICI in particular was a very exciting number. HDFC has its own set of issues. I think they're clawing through those issues. And once it's done, even at this valuation of 1.6, 1.7 times, I think it's a pretty decent stock to own because anyway, when you're building a portfolio, you need steady plays. You need these high conviction ideas which give reasonable returns. And I think banks, the private sector banks, particularly the top two, are the ones which should be doing that.
Okay. So private sector banks you are liking. What about cap codes? Are you looking favorably at cap codes or some of the other stories in the energy space, Dinshaw, as a longer term theme in light of the lessons that we will all learn after what's happened geopolitically?
So in the energy space, obviously the OMCs are something that can be avoided today. Basically because I mean, we are very clear that the crude is not going to come back to those $60, $65 a barrel kind of a scenario for at least the given 6 to 9 months as such. So I think we'd rather stay away from that because I think they'll be taking a lot of hit going forward. On the upstream, I mean, ONGC and all these guys, no way. We're not going to touch these guys because anyway, there'll be some windfall taxes coming by at some point in time for these guys. So that's again avoidable. However, having talked about energy, if you go into a bit more diverse space, which is like power, that is where the capital goods play is for us. We're looking at all these transmission equipment manufacturers. That is where we are more excited about in that space as such.
Okay, so picks and shovels and